We're going to make this an unbelievably informative day. PM was you. Oh, yeah, I got it. I replied. Oh, we got another one? Cool. No worries. Guys, it's been a great morning, at least for me anyway. I hope it's been a great morning for you. Um, lot of rules following today, and I'm going to tell you what, it was kind of cool this morning because I was watching the Nasdaq. Hey, good morning, Cisco. Um, and I just sat on my hands for so long. I sat on my hands and I did nothing for so long. And there were so many instances where my rules were almost met. Almost met. My rules, my plan. But not quite. And I chose not to take these trades. And for those of you that don't know, my brother is the guru himself, John Novak. And his plan's a little different than mine. His chart reading is a little more advanced than mine. And his entries may be a little different. And it was weird because I had to sit there. No, I'm not, Cav. I already hit my goal. I'm just talking to you guys now. Um, why did you hear something from my computer? Now you got me nervous. Or was just one that set up? No, I'm not in any positions. Okay, I had to double check. Um, so one of the things that I had to do this morning is I had to sit and I'm on Skype with my brother. For you guys that don't know, um, we talk all morning. I mean, we talk all morning long. And one of the things that he'll do is he'll say, "Man, I'm going short here. I'm going long here. This is my read. This is what I'm doing." And it's so hard to not get just enthralled with what he's doing and to believe what he says wholeheartedly and want to change my plan on the spot to match what he's doing. And guys, I'm going to tell you right now, and I hate to admit it, I can't manage as well as my brother. He reads charts so fast and he is into trades so quick and he's managing out of trades so fast when things go wrong. I consider myself a pretty good chart reader, but I don't have his skill set. Um, and the reason that I am telling you guys this is because we're going to talk a lot about a high probability trend trade today, and we're going to talk about rules. And your rules need to be your rules. Your rules, you need to own them, accept them, embrace them, love them, and make them yours, and just really commit to your trading plan in the beginning. And what you're going to find is that as you grow with the software, more and more opportunities will present themselves. But I'm going to share this one little thing that I wrote, and I wrote this a long time ago in response to somebody um, that was having challenges, if you will, with watching other people take trades that they felt broke the rules. And this is how we're going to start class today, guys, before we ever go to news. The key to everything that we do, and I just kind of want to give you an idea of what to expect in today's classroom, is having a foundation, understanding some basics. Good morning, Erla, and hey, congratulations and welcome to the family. I see the green checkbox next to your name. Outstanding. Now we get to get the work done, right? Very excited to have you with us and in the family. Um, Guys, we're going to build a foundation. That's going to be your key, your core. That's what you're going to do. And understanding the basics and then giving yourself the ability to just grow from that a little bit every day, a little bit every week. So for you brand new users, for you folks that are brand new to reading your indicators, brand new to Nexgen, maybe even brand new to trading like I was when I started, I'm going to blanket you with these very, very conservative rules that optimize your chances of success as you learn to read your indicators. So for new users, you're going to hear me say things like don't trade in determination conditions. And if you don't have the right momentum, don't take your trade. It doesn't fit your rules. And that's not your entry area. That's not your best spot. And I do that, guys, because this very rock solid plan that I'm going to give you, these blanket rules, they increase the likelihood of success, guys. And confidence comes from that memory of success. And all these things that I'm telling you to avoid in the beginning aren't things that you'll necessarily avoid as you grow with the software. You're just not going to have the reps yet to understand when it's okay to bend your rules a little. And then the more time you spend with it, the more you're going to see. But this is the part that I really wanted to get to, is one of the biggest challenges, and guys, you may catch yourself doing this, is you're going to want to play trade police. Is you're going to see somebody post a trade in the room and you're going to say, man, that doesn't fit my rules. That doesn't fit that high probability trend trade. Uh-oh. Can you guys hear me now? How about now, guys? Is it back? Yes, it is back. Let me make sure that all my connections are good. Can you hear me good? I may have. Okay, so am I back or not back? Give me a Y if you can hear me. I want to make sure. Okay, hold tight. All right, can you guys hear me now? I did a little reboot on it. Some days Discord likes to give me grief just to remind me that I'm human. Awesome. So guys, I'm going to say it one more time because I don't know if you guys caught it. One of the biggest challenges people have is becoming confused or even angry sometimes, which is weird to me. When somebody takes trades that don't fit the very simple plan, when somebody takes trades that don't fit the high probability trend trade, when somebody else is trading their plan that's built from their ability to read the indicators, don't be the trade police, guys. You have to understand that everybody's in a different spot in this room. This is like the old Little House on the Prairie farmhouse. Some of you are in kindergarten and some of you are about to graduate. So learn from their trades, but focus on your trades, right? And that's why I brought up my brother this morning, because I learned from everything that he does, but not everything that he does fits my plan. And you're going to grow and you're going to grow and you're going to grow and you're going to grow. But the idea is learn the process that yields results, guys. Learn how to read your indicators first. And once you learn how to do that, it's going to open a million doors for you. And you'll actually be surprised at how many opportunities that you can find in the market. Every morning, the first thing I do is I come and I check news. Guys, this is religious for me. Well, actually, I wake up and start the coffee pot. But then I come in here and I open my charts and I check news and I just want to see what's going on for the day. Today's Thursday, April 25th. At 8:30, there was a lot of red boxes, a lot of high impact news. And these are market movers, guys. These are where people react and have these crazy reactions that can ruin your day. The low impact, I don't worry so much about unless it's something like crude oil inventories and I'm a crude oil trader. So like at 10:30 a.m. there's natural gas storage, excuse me. If you're trading natural gas, well then knowing that there's a news release is very, very important to you, but I don't think I have any natural gas traders in here. At 10 a.m. we're going to have high impact pending home sales to the M&Ms. So um, that high impact, write a note, put a sticky note on your monitor, set an alarm with Siri, do something that says, hey, there's a big emotional reaction that could be coming. Let me step out of the way for a second. Great time to go to the bathroom, great time to go fix a sandwich. But I do this every day. Every day I come through and I check my news because I feel like it gives me a huge advantage. I feel like it lets me know when that market may be a little unpredictable, and that in itself is an advantage. Everything that I talk about, guys, is going to come from the education page. I do my best not to keep any secrets from you. And even more so, I really try to give you everything that you need without becoming too overwhelming. Um, I'm a big fan of simplicity. And there's really two sections to look at here, guys. There's a software user guide and instructions. This is all your NinjaTrader how-to, building charts, scaling charts, stops and targets, all the functions of the platform that the software runs on. So if you have questions about it, just click in there, see if you can find your answers, or even more so, if you're in the room, just raise your hand. Tell me what your question is. Maybe if your chart looks funky, show me a picture of your chart and then we'll work together to resolve your issue. I think the most important thing on here that you could use, where is it at, is the screen capture, guys. Making sure that you're comfortable taking pictures, making sure that you're comfortable posting them in the room. making sure that you're comfortable getting them into your spreadsheet. So I'm going to give a formal invitation right now. If you need a little help with pictures, if you need a little help with that spreadsheet, make sure that you let me know, and we'll do it. We'll stop class to make sure, because I firmly believe that that's one of the most important things you can do. And the second is the tutorial section. And this is where all the answers are. This is where everything that I talk about comes from. This is where all the rules come from. This is where the looks can be seen, where the advantages can be learned. This is where your roadmap to the first 30 days, consistent winning trades. I mean, everything is here for you. And I think the most important thing that you're going to find in this entire website is this definition right here: high probability trade. And a high probability trade is a trade that's defined when each indicator on every chart agrees for the trade. And typically this is when all the triggers are their strongest and no termination conditions exist. And there's no trouble between your entry and your target. This is a trade that when you learn how to find it and follow it, it typically wins 70 to 80% of the time. This is the trade that creates that confidence that begins to grow from your successes. But the most important thing that this high probability trend trade is going to do for you is it's going to turn you into a chart reader. It's going to allow you to look at your charts and understand what the indicators are telling you. Guys, the indicators are the most valuable tool ever. They are the best in the industry, if you ask me, if I can be bold for a second. But these indicators are no different than like the most expensive hammer ever. If you don't take the time to learn how to work with it, that tool is going to be useless to you. I can put you in Mario Andretti's Ferrari, but you're probably just going to crash into a wall if you don't learn how to drive it, if you don't develop those skills. So we're going to spend a whole hour working on chart reading, working on getting to the point to where you guys can look at a chart and understand. No problem. No, Batty, don't worry about it. So let's do this first. Go to your search bar. Here, hold on. See, Maddie, that's exactly what I needed. So you get rock star status for doing that. Go and search and type in TechSmith capture or just TechSmith. And man, let me change the screen. I want you to see the whole, I want you to see the whole process here. Here we go. So you can see my screen. I'm going to come down to the search bar and I'm going to type in tech, and hopefully it brings up TechSmith capture for you. If it doesn't, then I'm going to do this as well. I'm going to go back to the software user guide and I'm going to click on this bad boy. And guys, when I say that I think this is the most important thing that you could ever do, I stick by that 100%. So Maddie, you don't get to be sorry. There we go, right there. There's the link to it if you don't find it. Let me know if you need to download or if you can find it. It is right there on your computer. Sorry, I'm going back to the main screen, guys. But that's the first part, is having your TechSmith capture. You got it? You good? You found it? Dig it. So let's use it real quick. The trades that we teach, guys, the high probability trend trade happens on 2 charts. So it's important for you and for me that you always show me 2 charts. So when you're using TechSmith capture, you're going to pound on this big red button that says capture. And what I need you to do is, this is a click and drag tool. So if I hover over just one chart, it's only going to give me 1 chart's worth of information. It'll just take a picture of that 1 chart. So what I want you to do is I want you to left click in the upper left hand corner and drag it all the way down to the bottom right. And things that are real important here, guys, make sure that both of your charts are in line. Make sure that you show me timestamps so I can line things up, and make sure that you show me prices, because we're going to line those up as well. Once I release the button, release the mouse, it's going to give me 2 options. The first option is capture an image, and that's how we take our picture. The second option, and for those of you that are working on management, this is an amazing option. You can take a video while you trade, and you can talk yourself through what it is you're thinking while you trade. You'll be amazed at the things that you say to yourself mid-trade, especially when you're breaking rules. But we're gonna capture an image. And then, so once you capture your image, you have this image preview. So Maddie, are you with me so far? And is everybody with me? Some of you didn't want to raise your hand, but hopefully you're following along if you needed this tutorial. Is everybody good so far? You're up with your capture image and you're saying to yourself, cool, dig it. Look at all this great information. So here's what I need from you guys. Each of these tools, the arrow, the call out, the shape, these are all click and drag tools. So if I take an arrow, excuse me, I'm going to left click, and if I drag, I can do a short arrow, I can do a long arrow, I can take it all the way over to here. And then when I release it, that arrow's in place. Same thing with the shapes. If I click and drag a shape, I can put that shape somewhere. But guys, this is the most important. This is the call out button. And it's click and drag. I can make a small little box if I only have one word. I can do a big old box if I'm writing a dissertation. So typically, something like this is pretty good. And you can even move it if you need to. Like you can say, hold it, let me get that off of what it is that I'm pointing to so that you can see what I'm pointing to. But this is where I want you to do a few different things for me. I want you to just tell me what you see. And the reason that I want you to tell me what you see is because we're working on chart reading. So I want to know what your chart read is, because what I'm going to do is, for example, if you say, hey, Mark, I had weak triggers right here, so I chose not to take the trade. And I'll say to you, man, let's have a great lesson on trigger line strength so that this is something that you can work on and become better at, and all these different things that happen. Tell me what you see. If you enter the trade on your small chart, I want you to do this. I want you to take the call out, and I want you to say something like entered at area inside of triggers. And what it's doing is it's letting me know, because if you entered here, I'm like, yes, great job. If you entered here, I'm like, oh, you might have been a little bit early. And if you entered all the way down here, I'm like, hey, let's talk about how you can do this better. So showing me your entries is really important. And some of you only like to show me your entries. I also want to see your exits, because I want to know why. Why did you exit? Exited at fib support because I trust fibs, right? Whatever. And that's it. And you get in, you get paid, you're feeling great. But here's the deal, is as you grow with the software, you're going to have to work through a little bit of fear. And maybe this was your exit. And we can talk about why it was okay to hold longer. Maybe your exit was right here, right after you got in because you got scared. And what it does is it opens doors, guys. It opens doors for you and I to have a conversation, not only about the overall chart read, but also about how you handled it and how you were able to capitalize, where you were able to get in, how you managed the trade, because all of these things come together to turn you into a pretty complete trader. Once you have this chart annotated and you're ready to share it in the classroom, guys, and this is a big part, show me everything. Every time you take a picture, I want to see it. As long as you're annotating it, hit copy. And then if you're in the pop-out, you have to hit Control V, and that'll paste that picture right in the room. And if you click upload, it's going to give you one of those links to screencast. And if you copy the link, it's on your clipboard, and you can paste that in the room as well. And then, guys, all this is this opens the door for you and I to have a conversation. I'm going to click on your link, and I'm going to say, damn, Maddie, look at this trade. The momentum was screaming down, and everything was going, and you got a pullback, and it's right at a mid-band inside of triggers. And I love your exit down at the fibs. And dude, Maddie, let's repeat this one over and over. And if that's the conversation that we have, well, that's where the spreadsheet comes in, guys. I got you, Gary. You're going to come in and you are going to put your pictures into your spreadsheet. If you took a trade, it's going to go into your trade tracking sheet, and you're going to talk about how you felt and what you saw, what the conditions were. And then probably the most important thing is the feedback that you receive from class. So make sure that you include that in there. Maybe it is early entry, right? Maybe it's late exit. Maybe it is fought triggers. But whatever it is you're going to come back and study this tomorrow, and you're going to say, okay, these are some things I need to work on, and these are some things that I need to repeat. And if it is the best of the best, and it's that one that's like, holy crap, Maddie, high probability, I can't believe you did it, drop it into your personal trade setup so that you can come back and study it and repeat those things that are bringing you success. And then the spreadsheet also has a whole section where I fill it out with client stuff. So use the spreadsheet. We're going to get to that. But all right, Gary, so let's do this. I'm going to go back to continue editing. Gary, are you good with creating the box? Click and drag and create that box. That's the first step. You can just give me a Y. Cool. Do you see how the little cursor is blinking right here? This lets me know that I'm cool to type. If I don't see it, if you don't see this little Arial 24, then it means that you may have clicked someplace else and you're no longer in the box. So double click inside of the box and it should set you up. And then if you click over here to do something else, like, oh, let me get an arrow over here, just clicking once isn't going to let you type, but if you double click, it'll get you where you need to be. Let me know if that works for you. And you're going to see why I'm so adamant about being able to take pictures in just a second, guys. Yeah, let me know. And then if you need help, let me know as well. My whole goal in life is to get you guys where you need to be. And this is a very important part of it. Because, whoops, let me open up my little PowerPoint again real quick. We're going to focus on this high probability trend trade to create your ability to read charts, guys. And once you can read charts, you're going to understand where the market is likely to go, where it's likely to stop, where it's likely to continue. And I say it very nonchalantly because it's going to be a very nonchalant thing to you. Inside of 30 days, if you really focus on your study. Chart reading is about 90% of your day. 90% of your day. Guys, I sat with my brother for 2 hours on Skype watching the NASDAQ and my rules weren't met. I spent 2 hours doing absolutely nothing. I didn't win a penny. I didn't make any money in that 2 hours. But the flip side is I didn't give any money away by taking the wrong trades. I didn't give any money away by fighting my rules. So as much as your chart reading will get you into the market, your chart reading is going to help you avoid mistakes. But you're going to take these three concepts, where the market is likely to continue, go, and stop, and you're going to use them every day. Your likely to continue areas become entries for the highest probability trend trade that we're learning here in this first hour. The likely to go areas are where your profit targets can go as you develop a management plan. And then the likely to stop areas are what we call termination conditions. These termination conditions, and you're going to see them long before you ever get to them. I'm going to give you the easiest recipe ever to identify them. But these are the areas that may stop the market. These are the areas that can create untradeable bounces. And these are the areas really where the people that move the market are reacting. So you're going to be able to not only identify them, but you're going to be able to get paid at them. And you're going to teach yourself to trade from them rather than into them. And we're going to cover all of that. Your ability to read the chart is what creates trade entry precision. Your ability to understand three very simple concepts is going to put you into the market where the market is most likely to continue. And as you practice this, as you try to learn this, as you work on your chart reading, it's imperative that you post in the room, that you ask questions to make sure that your chart reading is on point. One of the biggest challenges new users face is partially understanding the rules, or even worse, creating their own version of what they believe the rules mean without checking with me, without dropping it in the room, without asking, hey, Mark, is my understanding correct? Most of those mistakes from those half reads can be fixed almost instantly within a day, but it takes you participating. From your trade entry precision, you're going to have to manage it. And I'm going to give you a plan for management. I'm going to give you a plan for entry. I'm going to teach you what everything looks like, and I'm going to teach you how to study it. And it's going to be a lot of fun, guys, because your step-by-step path to becoming a confident trader. And Maddie, were you able to get those pictures? I didn't even follow up with that. Sorry, I saw something shiny and it went sideways. Are you good? Did you take a picture? Did you write on it? Post it in the class. Let me see it. Gary, were you able to write on it? Post it in the room. Because guys, this is the first step in becoming a confident trader is posting in the room everything that you see and everything that you do and getting feedback. Let's make sure that you're reading your indicators correctly. And then the second part is using that spreadsheet, guys. The more pictures you take, the quicker you're going to get to where you want to be. The more charts you annotate, the more you're going to connect the words that tell you what the advantages are with what they are. Give it a go, Maddie, and if you need help, holler. Same to you, Gary. We're going to take about an hour, hour and a half, and we're going to learn the trigger line of Fibonacci rules for when it's okay to trade. You will not be an expert in an hour and a half, but you will have all the tools you need to go back and study it. And really, my hope is that you do your best to prove me wrong. That you, by the end of this first hour and a half, you just write down on a piece of paper, say to yourself, call your wife, go, you know what, this Novak character is full of crap, and I'm going to prove him wrong. I'm going to go back and I'm going to study these rules and I'm going to see and I'm going to show him that they don't work. And I promise you, if you do that, you're stuck with me forever, guys, because this is a trade that wins typically 70 to 80% of the time. Simulate, practice. It's monopoly money, guys. You can't lose money on simulator. Practice your plan, practice your rules, practice your chart reads, and post them in the room to make sure that they're right. Make sure that you are trading the correct rules. Simulator millionaires typically are live market failures. Getting lucky on sim, taking trades without advantages, it feels good because you're like, oh, look at all the money I made in the pretend world. And then you go live and that luck tends to run out. So practice the correct rules. Set yourself up for long-term success. We're going to simplify a lot. Simplicity is really my approach to life. Still can't type, Gary. Good morning, Cav. Are you on Snagit or are you on Capture? So you're on Capture. So you're with me here, right? Can you bring up the Capture preview? No problems there at all? We're going to walk through this real quick. That actually is a good question. So what color is your box, Gary? Is it black? What's the color on your screen? Thank you, Chef. I've done that, and I didn't even think about it. So if the color of the box is black and your text is black, you're never going to see it. Change that box to white. Man, Chef, gold star for you. And then make sure that your text color is different than the box. I wonder if that's it. If it is, and this is the beauty of the classroom, guys, is we've all made every mistake that you could ever. Good job, Cav. Me too. 7:13 a.m. Central. I was done trading for the day. Easy money rules followed. Great job, Cav. What are the chances that was it? Wouldn't that be awesome? Nice, Cisco. That's because I was following your lead, Cisco. I said, I bet you Cisco would be in this trade. So I took it too. And I said, I bet he got back in. You tried to put it white, but it stays clear. So there's no box at all? Gary, let's do something just for grins, man. Because it's the easiest download ever. Let's do this. Just reload the software. Maybe there's a bug in there. Maybe you've got a little snag in there that isn't allowing stuff to work the way it needs to. It'll take 2 minutes. Reload it. Let's see if we can fix it. And then if for some reason we're still struggling, Gary, who's your sales rep? Sometimes they can get on your computer and walk you through it and make it really, really easy for you as well. Chef gave me the best trick ever, and if that one's not working, I'm not sure what to do. Jim can probably walk you through that with the Capture software. He's really good at it. I can't for some reason figure out why it wouldn't let you type. And it may be because I'm not understanding the problem well enough. But I'm one of those people, I'll do everything I can to solve it. And if I can't, I'm going to get you to the guy that can. Um, so either tech or, and if you want, just, whoops, where's the link? And then Gary, if you feel like it, watch this short little video real quick and see if maybe you're missing a step that I can't see from where I'm sitting. And here's the link one more time. It's probably a really easy fix. But before you do that, watch that short little video for me and see if that helps you. My brother's done a pretty good job of getting everything almost autopilot. And sometimes when I watch these videos, I'm like, oh man, I skipped that step. So you're my mission today, though. You will be taking and annotating pictures before the end of this classroom. So guys, we're going to simplify. I'm going to pick up where I left off. I do get caught in sparkly things sometimes. We're going to focus on that high probability trend trade. That's going to be our foundation. That's going to be the base of everything that we do. Your high probability, oh, no worries, Gary. You can always DM me too privately if you need help in the afternoon. I'm usually around. Jim as well. Tech is always available during business hours. So let one of us get with you and we'll get you to where you need to be. Dag nabbit, hell or high water. Awesome. I'm going to give you a plan. It's called the KISS plan, the Keep It Simple Sunshine plan. When I give you guys this plan, it's going to focus on the highest probability trend trade, the one that teaches you to read your charts, the one that teaches you to recognize advantages. And it's really going to be the basis of what you do. That should be your foundation as you grow with the software. And then that's going to take you to the next trade, which is what we call a medium probability trade. And remember that reading indicators is the goal. Chart reading is the goal. So I want to go through the definition for a medium probability trade. First and foremost, this is not a trade that typically wins 70 to 80% of the time. That's reserved for the high probability trend trade, which is okay. But the medium probability trade is defined as when most of your indicators line up for the trade, however, a small issue exists. Your ability to read your charts, your ability to recognize advantages is what's going to allow you to recognize that problem that may exist. And this will be the vast majority of your trades. I promise you guys, you're going to find yourself in more medium probability trades than high probability trend trades. But when you're executing them, you have to manage them assertively. And then once again, it's your ability to read your charts, to react to the information your indicators are giving you in the moment that's going to allow you to manage them assertively. And if there's trouble in your way, you guessed it, your chart reading is going to identify that trouble, and you may take quick profits there. You may get to break even, and you'll find that these medium probability trades aren't always home run trades. And it's okay to get paid to make your money, to manage them assertively, but it's everything that you learn in the high probability trend trade that's going to set you up to take them with success. And the key is you've got to learn the looks, guys. You've got to fill out your spreadsheet. You've got to study these 300 pictures of people using the software. You've got to go through and you've got to learn the individual pieces so that you can piece them together for a whole. So we're going to talk about studying. I'm going to give you a couple study tools that are going to help you immensely. But remember, posting in the room, telling me everything that you see on your chart, using that spreadsheet, coming back, studying it the next day, asking yourself what worked, what didn't work, what was easy, what wasn't. Because a few moments with well-annotated charts every morning, it's going to set you up for success on the day. Guys, if you have a day where you can't stop trading in determination conditions, and the next morning you wake up and you see 5 losers in a row in determination conditions, the likelihood of you taking that trade goes down. Use the notes section, get that feedback. But let's do the high probability trend trade thing, guys. It's only 3 rules. Remember, simple. I'm not a smart man. And I've got a face for radio, and I don't know a whole lot. But what I do know is how to read indicators, and I'm pretty good at teaching you guys to do it. So trust me when I tell you, rule number 1 should always be met. Rule number 1 says that the large chart needs strong trigger lines. Guys, that gives you the advantage of momentum. Each rule gives you an advantage. You should learn to speak to yourself every time you look at the chart and ask yourself, first thing before you do anything else, do I have the advantage of momentum? When you do, you'll go to rule number 2. And if it's true, you're going to have a clear path. You're going to have nothing between you and your target. Remember, this is high probability, man. Everything is great. And if you do have a clear path, well, then rule number 3 is going to put you in where the market is most likely to continue. It's not so much that you want to be in a trade or you think it might go down or up. It's entering a trade means that you have advantages, that you have a statistical advantage, that you have a pattern in play that has been proven through study, through back testing, through simulation to win more than it loses. And that's exactly what these 3 advantages put together do. They give you a trade that typically wins 70 to 80% of the time. Once again, simplicity. We're going to find these 3 rules on only 2 charts. And then to make it even easier, on your large chart, on your big chart, your slow chart, a broad stroke of a brush, this 1 bar, that's it. This 1 bar is all it's going to take for you to understand the direction of the market, whether or not you have rule number 1 met and that advantage of momentum, and whether or not rule 2 is met and you have the advantage of a clear path. Literally 1 bar on 1 chart is going to give you all this great information. When it tells you that you have momentum and a clear path, that's where you'll turn your attention to a smaller, faster chart. And this is an entry chart, guys. That's it. This is where you're going to refine that broad stroke of a brush. What happens inside of 1 bar on the large chart is going to happen in typically 20 to 30 bars on a smaller, faster chart. From the top of the bar on the large chart to the bottom of the bar on the large chart, you're going to see a full retracement and probably an entry. And all this great stuff that allows you to reduce risk and increase profit potential, but it's going to pinpoint where the market is most likely to continue. But it's important that you let the large chart lead the way. It's important that you let the large chart give you those first 2 advantages and that you don't put the cart before the horse, because the small chart is really associated with, let me show the picture. I love this one. This is my who's in control picture. The large chart is everybody with money making things happen. They define the direction, the areas, they define the momentum. And the small chart is this group of people. They probably drink, I don't know. But they fight the large chart. When the large chart says up, they push down. When the large chart says down, they push up. And we love the small crowd. We don't want to be in their group. But you guys are going to take advantage of that little fight that they create on a smaller, faster chart. And you're going to pinpoint exactly where they're probably going to get stuck. And that's going to become your entry for the highest probability trend trade. So only 2 charts, only 3 rules. And rule number 1 says that I have to have strong trigger lines. So we're going to go through and we're going to look at these and talk about them. Guys, strong trigger lines is pretty simple to recognize. It's not a difficult task. First and foremost, if the background is green on your large chart, the market's going up. Just accept it for what it is. And as a brand new user, your best bet is to only go up with it. Your best bet is to only look for long trades to buy the market. When the background is red, the market's going down. And as a brand new user, your best bet is to go with the flow there. Don't fight it, right? Salmon fight it all the time and they die when they get to the end. Don't be a salmon. Strong triggers, your trigger lines, both small and the large, they have to match the colors. If your background is red and your triggers are green, you don't have strong triggers. If your large triggers, the dash lines are green, and your small triggers are red, they don't match. You don't have strong triggers. The only way to have strong triggers is if your small triggers are green and your large triggers are green when the background is green. And then what strong triggers means is that the smalls have broken above and away from the large triggers. The space between the 2 lets me know that the odds are favorable for the market to continue up. Odds favorable momentum is the first advantage. You're going to see it annotated OFM on charts. Odds favorable momentum means the market is likely to continue up. Odds favorable momentum is capable of breaking those key Fibonacci areas where the people in charge may react. And my favorite part is odds favorable momentum may even cover some of the mistakes that new users make, because it's very difficult to stop a market that is screaming in a direction. In a downtrend, the smalls are below the large are wide, the space is there. I want you guys to think about scissors, open, ready to cut. That space lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. You guys are going to be able to buy Fibonacci support on a smaller, faster chart when you have strong triggers up. It looks like a tail on the large chart, but remember on the small chart, it's a full retracement and then a bounce. And then when you have those strong triggers down, you're going to be able to sell Fibonacci resistance on a smaller, faster chart. And it's this accuracy, being able to pinpoint that spot that's going to allow you to reduce risk and maximize profit potential, but it begins and is dependent on odds favorable momentum. Well, if open scissors means that we have an advantage, when those scissors close, we call this a weakening of the large triggers. When the small triggers work their way back inside of the large triggers, the trend is slowing, the momentum is slowing, and the phrase that you're going to have associated with it is anything can happen up or down. So you take yourself from odds favorable to anything can happen. And if I'm a betting man, I'm betting on odds favorable every time. And there's kind of a life cycle to momentum. When it's its absolute strongest, when that gap is the biggest, this is the best of the best, guys. This is where we're selling Fibonacci resistance on a smaller, faster chart. Odds favorable momentum continues all the way until the triggers come back to one another. So this gap is as much odds favorable as this gap. But as it comes back, when one of those small trigger lines works their way inside, you can see visually that the scissors are closing. You can see that the momentum is slowing. And when you become more of a chart reader, you'll still find opportunities for short trades there. But your chart reading will have you managing them a little more assertively. When the smalls work their way inside, you have anything can happen triggers. You may still find opportunities there. You'll be able to speak to yourself in terms of advantages fluently enough that you'll understand whether or not it's okay to try that last short to get down to that next key area. But when you reach a key area and you have those anything can happen triggers, man, this is where the market typically bounces, where it typically reverses. And that's kind of our segue to the next rule. Rule number 1 says that you're going to have strong trigger lines. Let's see if we can find a couple of those for you on a larger chart. This is gold, by the way. When I have odds favorable momentum, the market is likely to continue in the direction of the trend. I'm going to get in the habit right now of circling a tail every time I see it. And I'm going to say to myself, you know what? This may have been an entry on a smaller, faster chart. With all this momentum, that might have been an opportunity for me to capitalize. I may have been able to make a little money there. Is everybody good with this look? In an uptrend, smalls above, space between, the market's likely to continue in the direction of the trend, and it does it a couple times. And if you scroll back, you see it again. Odds favorable pushes it down. There's another one of those tails. There's those anything can happen triggers and a deeper retracement and a deeper retracement still. And finally, like almost the reversal that sets off things going the other direction. Weaker triggers right at fibs. Look at the bounce. Weaker triggers. Look at the retracement. Odds favorable. Tail, 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 tail. Guys, let's make some money. Odds favorable takes us all the way to that big ugly red line. Odds favorable pushes us up. So go back. Take pictures, guys. Take pictures of momentum. Talk to yourself. This most current bar, the large triggers are down and the small triggers are up. Do I have odds favorable momentum? Do I have strong triggers when the colors don't match? What do you guys think? Give me a Y or an N in the room, and then we'll go on to rule number 2. In most current bar, anybody? You have a guess? No, absolutely. Whoa, but now we do. See how fast that can happen? Be patient. Paul's like, yeah, this one is, but that one wasn't. Look at that, odds favorable, and look how the market is pushing. There's a live example of it, guys. Once we have that momentum, we got to make sure there's nothing in the way, that we're not trading into termination conditions. Because when termination conditions are false, meaning they're not there, well, I have room to my profit targets. And when I have room to my profit targets, we're going to call that the advantage of a clear path. Once again, we're keeping all of our efforts on the large chart to begin. The large chart is going to give us tons of information and let us know when it's time to look for an entry. The large chart has to tell me that I haven't reached an area that may stop the market. The areas that we're looking for, and guys, these are where the people in charge react, where buyers buy, sellers sell. Divergence high lines, divergence low lines, red Fibonacci resistance, blue Fibonacci support, and yellow one-to-ones. The cool thing is it doesn't matter what creates any of those lines. It doesn't matter how yellow one-to-ones came to be to understand the recipe for knowing when they may stop the market. You don't have to know the Fibonacci sequence to recognize when a blue or red fib may stop the market. You don't even have to understand how divergence is created to be able to utilize that line to understand whether or not it's going to stop the market, has the potential to break. What you're going to use is your trigger lines. And when price reaches the area, your trigger lines are going to let you know if the area is likely to stop the market, if the area has the potential to break, or if the area is already broken and it's time to look for our rules being met. And it's a very, very simple recipe. If decisions are made at key areas, we have to let price get to that key area. We have to let the market push all the way down to Fibonacci support. When it does, the only thing I need you guys to do is ask yourself, where are my trigger lines? And if they all remain above support, don't go short. How easy is that? And the cool thing is if they reach resistance and all the triggers remain below, don't go long. This is an area that may stop the market. This is an area that might create an untradeable bounce. This is an area that could create a full reversal. And the only thing that you have to do is understand that you don't know. Right here in the moment, when price reaches support and the triggers are up, I don't know what's going to happen next. I can't be expected to know what happens next. But I do know that my advantage of a clear path is gone. Guys, can everybody give me a Y in the room if that makes sense to you? If the idea that if price reaches an area, whoops, let me go back. I'm going to pull up some pictures here. If price reaches an area, here they are at highs. If it reaches a divergence high line and the triggers remain below, no more long trades. And if it reaches Fibonacci resistance and the triggers remain below, no more short trades. And if it reaches those yellow one-to-ones and the triggers remain below, guess what? No more long trades, guys. And then the same is true going the other direction. The recipe never changes. If price reaches yellow one-to-ones, the triggers remain above. Let's sit on our hands. Let's do nothing. Let's wait for the reaction. It happens at support. It happens at the divergence lines. But the recipe never changes. Price reaches, and where are my triggers? And notice that price reached yellow one-to-ones here. I love this picture. And then from the yellow one-to-ones, it pushed all the way up to resistance and the triggers were below. I couldn't go long or short. I had to sit on my hands while this thing played Pac-Man for a minute. And then eventually, it sets off in the other direction. Eventually, the market gets to the point to where I have a clear path. And that path is clear when both your small triggers and the large triggers get to the other side of that area that you didn't trade into. So if price reaches support and you pump the brakes, once small and large get to the other side of support, it begins to behave as resistance. And if that most current bar hasn't reached the next area, ladies and gentlemen, you have a clear path. And if I couple that clear path with rule number 1 being met, that odds favorable momentum, well, you guys just pinpointed exactly where that tail is most likely to form. You guys entered the market there in the highest probability trend trades you could take, and you rode that wave of momentum all the way down to Fibonacci support. That's where the market was likely to go. And you got paid, and it felt good, and it created confidence because you waited for the clear path. So for the brand new users, either the market hits an area and none of the triggers break and you sit on your hands and do nothing, or the small and the large clear the area is now broken, and you're looking for your rules to be met for high probability trend trades. And if you allow it to be simple like this, it's going to take a lot of the guesswork out. And if you allow it to be very, very basic, you're not going to have to overthink. But your ability to recognize both of these patterns in a moment's notice is going to set you up for that first medium probability trade that we talked about, guys. And the first medium probability trade is what we call a 50-50 trade. And that 50-50 trade simply means that, let's draw a picture today. I feel like drawing pictures. Hope that's okay. A 50-50 trade means that 50% of your trigger lines, the small, have gotten below the area that's problematic, but 50% of your trigger lines have remained above. 50-50, pretty clever, right? We didn't spend any money on a marketing team for that. What does this mean? Well, a 50-50 trade means that with, and all caps, guys, odds favorable momentum, strong triggers, scissors open, whatever you need to think of to let you know that advantage of momentum is there. With odds favorable momentum, this area has the potential to break. It's not broken. It's not broke. It's not broken because both large and small must get through for that to be true. So before I go any further on this one, give me a Y in the room if you're with me. This 50-50 look means that the area has the potential to break. But it is not a clear path. It can never be a clear path. It can never be a high probability trend trade. If you look at the rules for the high probability trend trade, guys, that pulls the middle one right out of the equation. I don't have a clear path, but your chart reading is going to let you know when you have the momentum for the potential to break. Your chart reading is going to make sure that you have the best of the best entry area. And man, this is when I might be able to take a shot if my chart reading says that I have an advantage. And guys, 50-50s happen all the time. Here you go, Chef. I'll drop it right in the room for you. 50-50 trades set up all day long. When I told you that the majority of your trades are going to be medium probability, I meant it. Normally I just make stuff up to sound cool, but that's not one of these instances. Sometimes your small triggers will get through the area, but the large triggers will not. You'll notice that that area never broke and the market went down. There's another 50-50 that failed. There's clear path all the way, lots of money, a 50-50 that failed. I'm going to give you guys a plan to be able to take this trade with the highest level of success. Right now, I've got odds favorable momentum, and my small and large went south of support. It's behaving as resistance. There may be an opportunity for a high probability trend trade short here. You don't give style points? Well, shoot, I quit. No way. Guys, this is the best of the best. Clear path. This is the worst of the worst. Termination. This is the, let me make sure everything's great before I commit any money to this look. And I'm going to give you the plan for it, guys, but we're going to go on and talk terms again. This is what we call a pivot stop out. And if you looked at the beginning of the room, guys, I put some Word documents in there, and I put one about the pivot stop out. A lot of times on your large chart, you'll see the market go down and up. That's a pivot. That's all a pivot means. The market went up and down. It went down and up. That's a pivot. Pivots happen all day long. Sometimes there's a loss of momentum at a pivot. And if there is, if price and momentum don't agree, you'll see this divergence line. And it means that momentum is lagging. This divergence line means squat. All it means is that there was a loss of momentum. It doesn't mean that the market's going to reverse. It doesn't mean that the world is ending or anything. The sky isn't falling. It's just a line that prints out to the right. Lets you know that there's a loss of momentum. But, when price reaches that divergence line and the triggers remain above, well, now it's a termination condition, guys. Now we're saying don't go short into it. And if price trades below and back above, it creates what we call a pivot stop out. This is your pivot. This is the stop out. Guys, this is strong. And when price trades below a divergence line and then back above, don't take any more short trades. That's it. It's that simple. And then, of course, if that's true at a low, I suppose it stands to reason. Hold on. Let me just double check my rules real quick. That if price trades above and back below a divergence line at a high, don't take any more long trades. Guys, these pivot stop outs are strong, and they become even stronger when they coincide with Fibonacci resistance or support. This is a termination condition. This is not a pivot stop out. This is. It's a pretty common misconception. But when price reaches triggers above, you know no shorts anyway. You guys got that figured out. And now my favorite picture ever when we talk about termination conditions. And the cool thing is we've seen this a couple times already today. Price is screaming down, right? Everything is flying to the south side. The momentum is strong. Life is good. Here it goes. and then it hits these yellow 1-to-1s. And when it does, everybody in this room says, you know what? Price reached an area and the triggers remained above. Let me sit on my hands and do nothing because I've lost my advantage of a clear path. You guys are all cool with that. And it saves you money because there were buyers waiting there and they said, guess what? Ha ha. And they pushed up, and that's what the buyers sound like. And they pushed right into resistance and all the triggers remained below. And man, well, I can't go long either. And I can't really go short because the area didn't break, and I can't go long because it didn't break here a couple times. My colors don't even match on my triggers. What on earth am I supposed to do? If my rules aren't met, how can I get paid? Guys, this is your 90%. This is also the look where patience runs thin. This is the look where that little devil on your shoulder says, dude, Mark, it was a termination condition. Let's go long. Oh, Mark, it was a termination condition. Let's go short. And it's not uncommon to find people willing to break their rules losing $1,000 within a very short time because they form opinions on what they think the market is going to do. This is your 90%. This is where you are training yourself that the only reason to enter a trade is because rules are met. And then what happens eventually, notice that all the trigger lines get above resistance and it begins to behave as support. And we happen to have momentum, and then great googly moogly, there's one of those tails. This is where you guys are pinpointing exactly where the market is most likely to continue. Guys, this is your 10%, and if you take nothing from this classroom today other than this, 90% of your day will be spent reading indicators and waiting for advantages, and if you get good at the wait, it's easy to capitalize on the 10%. It is effortless to take this $450 trade and still have $450 in your account. But if you are impatient, if you create opinions, if you trade hope rather than rules, that amazing trade still has you down $550 and maybe a little pissed off at the world. So I want you to just be really good with the idea that you don't have to be in every move. Sometimes the market's going to go for thousands of dollars and you'll never have your rules met, and that's simply not your money. If you walk into a bank and you say, give me all the money, some nice guy is going to tase you, hog tie you, and haul you off to jail because you're a bank robber. But if you walk in and you say, hey, may I have my money, please? Suddenly, you're walking out and the pockets are full. I love it too, Rob, because it's so true in regards to trading. So is everybody comfortable? We've identified it. We have given it a definition. We have said to ourselves, gosh, doesn't this look just like the manual? I love this. Well, I'm in Texas. Doesn't this look just like the manual? Small and large get below support. It behaves as resistance. There's a tail. It goes to support. Guys, look at this picture. This picture is from, if I'm not mistaken, 2021. This picture is from the live market. Guys, patterns repeat themselves every day. We're just learning the patterns that are going to get us paid. Sometimes price doesn't reach an area. Sometimes you have a clear path, or you even have a clear path with all the momentum in the world, and you're thinking to yourself, I can't wait to take that long trade. There is one more termination condition that we're going to talk about. This one does not happen on a large chart first. It will happen on a large chart, but you're going to see this on a small chart. This is the only termination condition on a small chart. This is the only time on a small chart I am going to say that I don't have rule number 2 met, that I don't have a clear path, guys. And on a small chart, it's going to be 3 divergences in the same price range. 3 divergences in the same price range says don't take the trade. You've reached a termination condition. 3 divergences in the same price range may terminate the trend. It's not guaranteed to terminate the trend. It's not 100% set in stone to terminate the trend. But it removes your advantage of a clear path, and that should be enough for you guys to say, I don't want that next trade. It becomes stronger when the small triggers work their way inside of the large triggers. Do you remember in the high probability trend trade rule number 1, you guys were able to recognize odds favorable momentum and anything can happen triggers? It's the exact same lesson here, guys. Anything can happen triggers and 3 divergences makes those 3 divergences stronger. When the third pivot's higher than the previous from a low or lower than the previous from a high, it becomes even stronger. So 3 on its own can ruin your party. 3 with anything can happen triggers. A band of bikers just showed up to your party. 3 divergences, anything can happen triggers, higher final pivot. They've been drinking tequila for the last 17 hours. So guys, learn this look, because what it's going to do for you is it's going to help you see change that you can't see on a larger chart. It's going to help you recognize when the market is turning, but the illusion is there on the large chart that nothing has changed at all. So those are termination conditions, guys. These are your first 2 rules. That's the large chart leading the way. Before you ever take your eyes off the large chart, you will have momentum and a clear path if you're following your rules. And then once you have that, we have to go to the smaller chart, the faster chart, the refinement chart. What happens in 1 bar on the large chart happens in 15 to 30 bars on the small chart. And you know what I forgot? Oh man, I rearranged my PowerPoint today, but I forgot to put this one. I want you guys to see the refinement process. 1 bar on the large chart, you see down, you see strength, you see the path. Everything happens on that 1 bar. Well, the bottom of this 1 bar is going to be the beginning of that fight from the small crowd. The top of the bar where the tail forms should be an area of resistance inside of favorable large triggers, and then price goes all the way back down, and it doesn't create a new bar until they break through the bottom there. So all of this up and down happens in that 1 bar, and this is why we don't use the small chart to define momentum, because small triggers might turn against you on a small chart. And this is why we don't let a divergence on the small chart scare us, because the momentum's over here. Even areas. The way areas are used on the large chart to define problems, we're going to use them on the small chart to define entries. So we're going to take that refinement process, guys, and you guys are going to be able to use a limit order because you're so precise. You're going to wait for the market to come to you, and you're going to wait at areas, and you're going to wait at areas that are inside of favorable large triggers. The areas that we're looking for on the small chart are going to be Fibonacci support or resistance, yellow 1-to-1s, or a midband. And we're going to have them nestled inside of what we call favorable large triggers. And favorable large triggers means that your large triggers and your synthetic triggers. There's 2 sets of large triggers on your small chart. The large triggers are smooth. They're going to work with the small to define momentum. The synthetic triggers are stepped. It doesn't matter how they came to be, guys. They're just the large triggers from the large chart. Why do we do this? Because we find that when they are overlapping, one on top of the other, snakes riding piggyback, I love seeing that on Paul's charts. This is the best of the best look. These moving averages are where I expect price to return to. That's it. That's all they do. They don't get me in a trade. They don't create a bounce. There's just where I expect price to come back to, because averages typically correct. But when I nestle fibs, midbands, yellow 1-to-1s inside of those tightly layered triggers, I give the market something solid to bounce off of. It's like throwing a tennis ball, and I don't expect it to bounce until it hits that wall. Areas inside of favorable large triggers create that wall. Favorable large triggers will allow you to reduce risk. They'll allow you to increase profits. And when they're tight one on top of the other, your entries become effortless. Your risk becomes minimal, and it really takes a lot of the stress out. When your trigger lines begin to split, you're going to hear split triggers in the room. What you're going to find is that you don't know where price is going to correct to. You don't know if it's from the top or the bottom, if it's the 1-to-1s, if it's the mid band. And guys, this indecision increases risk dramatically. And a lot of people will take this look and get stopped out of a trade, and then it just bounces off the other correction point. So for the brand new user, embrace favorable large triggers. And we're going to use the refinement process pretty easy. We're going to start with the rules being met on the large chart. Odds favorable, momentum, and a clear path. And once the rules are met on the large chart, we're going to wait for a reversal bar on the small chart. This signals a pullback. This lets you know that the small crowd has begun their fight. The reversal bar is not your entry. The reversal bar is not when you sell the market. The reversal bar is going to have you looking for those trigger lines, those favorable large triggers. And you can draw a box from the top to the bottom, from the lowest line of the two triggers to the highest line of the two triggers. And the further they are apart, the bigger this box is going to be, the larger the correction point. But this isn't where we're trading from. We don't trade from the large triggers. Well, you can if you want, but if you really want the highest advantage, you're not jumping in when price hits the large triggers. You're saying to yourself, these are just moving averages. Let me give the market something solid to bounce off of. Let me give it a Fibonacci area, fibs, mid-bands, yellow 1-to-1s, and let me be certain that they're tucked inside of those favorable large triggers. So not only am I waiting for price to come to the correction spot, but I'm giving it something to bounce off of. I'm giving it a solid wall to create a ricochet. And I'm looking at these fibs and these 1-to-1s, and I'm saying to myself, man, these are outside of the trigger lines. These are on the wrong side of the correction point. Why on earth am I even looking at these? I'm staying focused. And I want you to see the difference in size. There's your trigger lines. That's a big honking box. There's your window of opportunity. This box represents where the market is most likely to continue. This box represents exactly where you expect this momentum and clear path to bounce and continue down. So you're going to activate a limit order, 1 to 2 ticks below the lowest point of resistance. And guys, we're 1 to 2 ticks below because this chart says down with anger. This chart says nothing to bounce off of. It's better to get in low and be okay with it going up a little bit rather than to hope it goes high only to miss the trade. So your limit order goes 1 to 2 ticks below the lowest point of resistance inside of favorable large triggers, and now you pray if that's your thing. You've done all you can do. You have assured yourself the advantage of momentum, you have insisted on a clear path, and you've even activated a limit order where the market is most likely to continue. And if the small crowd can do their thing, you're in a short trade. You're in a short trade with odds favorable momentum. And you're in a short trade with absolutely nothing in the way. And you're in a short trade from the area where the market is most likely to continue. And guys, if you give me 20 days being able to figure out this entry, being able to recognize, being able to commit to your entry, learning to trust it, this is the entry that typically wins 70 to 80% of the time. This is the one that creates confidence through the memory of success. And this is the one that it takes 2 charts to pull off. Odds favorable and a clear path on the large chart. This is so important. And then once I have it, guys, the market's trading all the way up here. But up there is the beginning of my pullback, right? So you're saying to yourself, Mark, there's only like 6 points to get to trouble. Well, if you wait for the pullback to support inside of favorable large triggers, suddenly there's 16, there's 20 points to get to that trouble. And because you entered down here, your profits potential increases. And because you waited for the pullback, your risk is going to go down exponentially. And guys, all you have to do is go through the process every time. Reversal bar begins the pullback. Identify the triggers, the red box. Identify the areas inside of favorable large triggers, the blue box. Activate your limit order and understand that areas beyond the correction point are not where we expect the market to go. Areas beyond the correction point are not where we expect the market to go, and we're going to use that idea for our initial stop placement. If you understand where the market is likely to continue, if you commit to the process of learning this, if you get to the point to where you're comfortable with it, you know that the market shouldn't go beyond that window. That's where your first stop is going to go, typically 4 or 5 ticks above that window of opportunity, ideally outside of the trigger lines, outside of the correction point. But the wonderful thing is, with all that momentum and clear path, you're more apt to get a reversal bar than you are a stop out. You will get stopped out 20 to 30% of the time. And losses are a normal part of a positive equity curve. Losses are a part of doing business when the rules are met. But if you get a reversal bar, you'll reduce risk even more. And guys, it is not uncommon to see Nexgen users enter at the right spot, control their risk behind a reversal bar, and only lose a couple ticks on trades that fail, rather than holding and hoping and wishing and wanting and giving away 200 to 300. And I'll tell you that a $50 loser is easy to pallet, so much more than a $250 loser. But the idea is you've got to get good at these very basic rules. You've got to get good at these very basic looks. What is momentum? Go to your spreadsheet. Your second tab is dedicated 100% to teaching you to read these very simple concepts. This Word document that I'm about to put in the room, guys, this is Chart Reading 101 is what we call it. And Chart Reading 101 is going to create recognition, but it requires a little work. So for those of you that think because you bought software, because you rented software, you're entitled to wins, I hate to break it to you. You're going to have to learn the looks. But the fastest, easiest way to do it, the quickest path to getting you to where you want to be, is take 25 pictures of strong triggers. Go back historically. Don't put the pressure of a trade on you. Go back and look at it and say, man, there's separation. This is great. Annotate your charts with the whys. Why is it strong triggers? Well, these are strong triggers because the smalls are below the large, because there's space in between. This means that they're strong. The odds are favorable. I have momentum. Rule number 1, commit this look. You can find them. They're there, Andy. They're there. Maybe not in one day. And then, guys, you've got to understand when your rules are met, you have to know what it looks like when they're not, right? When they go inside. But if you go through this process, if you take 25 pictures of strong triggers and weak triggers, you'll probably never make a trigger mistake again. And if you take 25 pictures of a clear path and of termination conditions, the likelihood of you trading into termination conditions is going to go down. And if you take pictures of that 50-50 look, you're going to be able to recognize it. And if you take pictures of entries, you're going to get it. But guys, you can't just take pictures and forget about them. You need to annotate your charts with the whys. Why is it a termination condition? Well, it's a termination condition because price reaches the area and the triggers remain above. This is the term. The path is not clear. Rule number 2 is not met. As you type on your charts, what you're doing is you're training your brain to associate the look with the advantage. You're training your brain to associate the look with the disadvantage. And if you do that for each individual picture, if you take the time to type it out, 265 pictures is what this adds up to. Guys, you're going to be a freaking rock star with your chart reads. It's going to become effortless and easy. And if you have questions, you can post them in the room. If you do this drill and you're like, I just need Mark to check me, send me your spreadsheet, email it to me. I'll take 20 minutes of my life to go through it to help verify, make sure you're comfortable. But you're going to piece together the individual looks to create a trade. A trade is the process. A trade is the accumulation of advantages. So I put this in the room, and I'm going to tell you right now, if everybody were being 100% honest with me, I would bet dollars to donuts not one of you that's been with me for the last 3 weeks that I've been introducing this and asking you to do it, I would wager to say none of you have gotten up to 25 pictures yet. Prove me wrong. Show me a picture of your spreadsheet. But if you haven't done it, well then why are you expecting success without effort? That's what I have to ask you. So, are there any questions about the high probability trend trade? Are there any questions about momentum, a clear path, or an entry area? Are there any questions about who's in charge? It's not you. Any questions about what you need to put on a chart? Any questions about areas? Any questions about what charts we use? Any questions about sharks? Haha, this is my favorite. This guy runs the market, guys. This is the big money investor. We're remoras. We make him do all the hard work. And then we just jump in and take advantage, make our money, get the hell out, wait for the next advantage. And that's what makes trading easy, guys. When a termination reverses the market, life is good. When it creates an awful lot of momentum, great things happen. Right up until I hit Fibonacci resistance, and then I have to sit on my hands and wait. When I reach resistance with weak triggers, I have to wait. And when I'm right into resistance and my triggers are below, I just have to wait, especially with split triggers. So guys, I'm going to give you a plan now. This is the second part of what I do every day. Every day. This is the KISS plan. Keep it simple, sunshine. Because it turns out I'm not allowed to call you stupid. Keep it simple, sunshine. And guys, this is a stepping stone. If you are a brand new user, the first part of this plan teaches you to read your charts. It teaches you to recognize the high probability trend trade entry. Once you become a chart reader, It teaches you to take that 50-50 trade, that first medium probability trade. And guys, this is a stepping stone. When you're a chart reader, things change for you, but this one optimizes your chances of success. I love that phrase. It optimizes your chances of success. This is your best chance of success. So let's think about that for a second. If I am 6 months in with Nexgen and I'm not finding the success that I want, doesn't it make sense, perhaps, maybe, possibly, to cool my jets and let it be easy and focus on something that enhances my chances? If I am chasing all of the trades and catching none of them, doesn't it make sense to reel it in? If I'm a brand new user, doesn't it make sense to trade a plan that optimizes my chances of success? Because ultimately, guys, the goal is to get paid. And if you can follow something that gets you paid more than it doesn't it make sense to stick with that, to give yourself this advantage? Your simulation, study, class feedback, and continuous practice, you're going to make your own plan, guys. You're going to create a plan based on your ability to read charts. If you can't read charts yet, it's not realistic to try to trade trades that require chart reading. So keep it simple. And the easiest way, and I can't stress this enough, guys, don't fight the large chart. The large chart are the people that want everything to have happen, and they usually get their way. The large chart is like 90% of the desires in the market. And the large chart, here we go, my favorite ever, allowed John Novak to write this book, How to Commit Financial Suicide in One Easy Step. Warning signs your friends are in trouble. You guys are my friends, so when I see you do this, I think you're in trouble. And it's trading against strong triggers. When the momentum is up, I see you guys going short and losing because you form opinions about what you want the market to do. When the market is giving me odds favorable, momentum down, and you go long, I know that you're not trading rules. I know that you are just forming opinions. The same is true when I see you trading into areas that may stop the market. These are the two biggest challenges new users have. The difference between trading an opinion and trading rules. So I would encourage you, keep it simple. Don't fight the large chart. And then define your entry. Let it be your entry. Let this be your trade. This is the Paul Flowers high probability trend trade. This is the Josh S. high probability trend trade. This is the Luciano high probability trend trade. I don't care what Mark Novak does or what Jen does or Chef does, because I am responsible for my entries. I'm responsible and accountable for having my rules met, guys. And once you can find this entry, I've never had anybody use this checklist and do worse than 70%. So let me give you a copy of it to print out, to put on your desktop. Let me give you another copy of it that shows you what it looks like to have a strong top or bottom, that makes sure that you understand momentum and weakness, that allows you to know when an area is broken, when it's not, that gives you a clear understanding of when it only has the potential to break, and finally, one that reminds you the whole sequence for finding your best of the best entry. You should study this each morning for a couple minutes. Make sure you're comfortable with the concepts. Because once you can define your entry, guys, once you can get in where the market is most likely to continue, you have the arduous task, the burden of having to manage it, trying to get paid from that great entry. Your entries, I just inhaled my hair. Your entries as a brand new user are very mechanical. They're very if-then. They are very if I have a termination that reverses the market, then I will look for strong triggers. If I have strong triggers, then I will make sure there's no terminations. And if there's no terminations, then I will find an area inside of favorable large triggers for entry. Guys, it really is pretty simple. It can be that easy. Once you're in, you got to do something with it. So your management plan is 100% dependent on your ability to identify where the market is most likely to continue. And if you're uncomfortable with that, management's going to become a little difficult. But when you are good with that, when you get in where the market is most likely to continue, you understand exactly where the market shouldn't go. That's where your first stop goes. You are going to develop an affection almost for losers. especially when the rules are met. You're going to be able to say to yourself, you know what? These jackasses have to come get me because I have momentum, I have a clear path, I took the best of the best entry, and the only way they're taking my money is if they shoot beyond that window of opportunity. And they will 20 to 30% of the time. Cost of doing business, normal part of a positive equity curve. But with all the advantages that you're insisting on, more often than not, you're going to see a reversal bar. You're going to see that market start to go in the direction of the trend with all that momentum and clear path. And if you get a reversal bar, then your new stop is 2 ticks above it or 2 ticks below it if it's a long trade. And there's nothing to do anymore, guys. You're either going to get stopped out or you're not. You're not in control of that. The only thing you'll ever be in control of is whether or not your rules are met. But if you don't get stopped out, here's the cool part. Your first target's only $100 in the distance. And $100 adds up quick when you do that 5 or 6 times a day. But $100 is creating confidence, guys. You're saying to yourself, man, these rules work. Man, I can get paid in the futures market. Wow, this is amazing. Let me move my stop to break even now that I've been paid because I'm still learning to read my charts and I'm struggling to believe that odds favorable momentum and a clear path is my path to the next area. So I'm going to go break even and I'm going to have zero risk and money in the bank, and it's going to make it easier for me to hold for the second target. For the brand new user, the second target is $200 away, which means in about, I don't know, this was probably 2.5 minutes. You are in at the best spot and you are out at a predetermined profit target and you are $300 better for it. And if that is the best you can pull off every day, that's a $1,500 week, guys, and that's a $6,000 month, which is twice what you need to fund an Apex account, and it's a $72,000 year based off the most pragmatic mechanical approach that you can have. And here's the cool part. Once again, is you will craft a plan tailored to your personal goals based on your ability to read the indicators. Which means that once you've seen these go a few times, you're going to start to recognize that odds favorable momentum and a clear path is your sign to hold for bigger moves. This is your indication that the market may push down to that area, and I'm going to tell you it did. Let's see if I can get lucky and pick it out of here. I don't know. It's in the spreadsheet somewhere in there. But what you're going to find is you're able to hold for bigger moves. You're able to understand when you can collect more on that one. But everything stems from your ability to recognize an entry. Everything comes from your ability to get into the market at the right spot. So I'll ask one more time before I take a break here. Does anyone have any questions about momentum? Does anybody have any questions about termination conditions? Is anyone unclear on finding that window of opportunity? I'm going to give you right now, there's the PowerPoint that I used to teach this class. Please help yourself to it. If you have questions about it, let me know. Did you notice that the market turned from nowhere and went right back to a mid-band, and the large sugar stayed a full bar away and it finished the move down to support? That's a pattern, guys. That's a pattern that repeats itself every day, and I bet you somebody got short right around 82.39, if not 82.50, because all we're doing is recognizing patterns, and once you can chart read, these patterns get pretty easy, and it's almost like the market slows down with them. So I'm going to take a break. When I come back, guys, we did the first part of class, right? We all got together, held hands, and we learned the trigger rules and Fibonacci rules for when it was okay to trade. It's the most important thing that you can do, is not only learn what the rules say, but learn what they look like. And not only learn what they look like, be able to speak to yourself in terms of the advantages that those looks give you, and then piece them together for the trade. And then once we did that, you guys are going to simulate. You're posting in the room. So this is like the second half of class, where I look at what you've done. We talk about your chart reads. I give you a little bit of feedback. I ask you if you have clarity, and then we move on to the next one. Just because it's your chart doesn't mean someone else might not learn from it. So if you have a question, Andy posted a chart. If you have a question about Andy's chart, man, post it in the room. Let's talk about it. Don't question Andy's rules, but feel free to make sure that your read and his read line up, and one of you may be having challenges. simplify, you think, and man, you're right, Rakesh. You're absolutely right. Do you know what makes the entries easier? And I know this is going to sound like a Sunday school answer. Do you know what really makes the entries easier, guys? And you'll find this very, very much. First of all, reading the large chart is important, but reading it correctly is even more important. And then, Rakesh, if you took, that's what you're trying to figure out. So, once again, let's go back to it. How many pictures of strong triggers do you have in your spreadsheet? If it's somewhere between 0 and 10, that's not enough. If it's anything less than 25, well, then you're not serving yourself correctly. You're not giving yourself that advantage of recognizing it. Because I promise you, you'll never miss strong triggers if you have 25 pictures that look like that. And guys, this is where the dead horse comes into play. You'll probably never trade into a termination condition if you have 25 pictures of price reaching an area and the triggers remain below it, and you know that's exactly what you're looking for. And then once you can piece together those two things, if you take 25 pictures of a long trade bouncing off of support inside of favorable large triggers, this look is so ingrained in your brain that you know exactly what you're looking for before the market ever gives you an entry. And what that does for you is it says, look, there's momentum, but my path isn't clear and I don't have a trade. Because rule number 2 isn't met. And the key is to not talk yourself into a trade when the rules aren't met. What is this? This is the ES. Price reached Fibonacci resistance. It is weak triggers. So no matter how much I want to go long, my rules say don't go long. Is everybody comfortable with that? That's your live bar right there. Because you can't go long, here's the other thing you're going to have to fight through. It doesn't mean go short. All your triggers are up. Your direction is up. It simply means to every one of you in this room trading high probability trend trades that you don't have a damn thing to do. That you have to sit on your hands and do nothing because you don't have a statistical advantage. You can start playing the scenario, right? You can start working through what this means, and this is what I would do. I would say if triggers clear the area and give me momentum and a clear path, I'll look for longs. And that's my only option. And then I say, if the triggers roll from the termination condition and give me odds favorable momentum and a clear path, I'll go short. Until either of these happen, ladies and gentlemen, I'm not doing a thing. I'm not doing anything because I don't have an advantage. Can you guys give me a Y in the room if you're with me on that? Some of you said, I'm going to go short because of 3 divergences, and you got stopped out. Some of you said everything is green and I'm going to try to go long, and you got stopped out. Some of you said that's not my trade, and you still have all of your money in your account. And I think that's what I'm really trying to get into, right? There are easy trades. There will be very easy trades out there, but sometimes it takes a while to get to them. It really does. Sometimes it takes a little while for you guys to have rules met. Sometimes it takes a little longer than you want it to for everything to come together. But if you didn't take the short, notice how I came back to this one? Because your rules weren't met, then the money is still in the bank. So it doesn't mean the market can't ever go down again, right? But it does mean that a termination just reversed the market, which makes it a strong bottom. And it does mean that I'm on my way to odds favorable momentum. And that means, Rakesh, now I'm going to look for areas inside of favorable large triggers. And guys, give me a Y or an N in the room. Do you see how I have one line currently that lines up with triggers? There's my ES, Luciano. Show me yours. I showed you mine. I did a full clean out the other day. Let me get back to crude real quick so that we can talk about this. Do you guys see how even with odds favorable momentum, even with an area inside of favorable large triggers right here, that termination condition said don't do it? Does everybody see that? Because that's only part of it. Take a picture of it. Call it a termination. Put it in your spreadsheet, guys. That's an easy one. And then what are you going to do with that knowledge? I want you to do this too. And guys, I don't have to be in a trade to get smart. This term stopped the market. I avoided this loser because I respect terms. Did anybody go short there? Is anybody willing to admit that they went short there and lost? Anybody? Because of the momentum? Did anyone say, I'm going to give it a try? It's okay if you did. It's all right if you tried it, but you have to put it in the room and we have to talk about it because it means that you're missing a very fundamental part of what we teach. A very fundamental part. Why would you take an entry at 82.30? Why? You would trade why? There's nothing at 82.30, Rakesh. There's nothing. Not a thing. Why would you go long there? Is it a pullback to an area inside of favorable large triggers? Well then, Rakesh, those are your rules. I don't agree with them or disagree with them. But I think what you're doing is you're setting yourself up for potential failure. I don't know what your rules are, Rakesh. What kind of trade is it? Because if you jumped in because of the momentum, a close below is a loss of momentum, so how are you going to manage it? I don't tell you guys if your trades are wrong or right, but you have to be able to tell me your rules. If you can't tell me your rules for entry, then why is it in your plan? If you can't show me 15 pictures of your trade winning more than it loses, why is it in your plan? That's all I'm talking about. So Rakesh, I can't say if it's wrong or right. That's totally up to you. Tell me why. It may be a great trade. Hell, I don't know. So Rakesh, this is going back to when I talked about trading half-truths, right? Not trading rules, but trading your rules, which is okay. But if it's a high probability trend trade, I'm going to use a limit order at areas inside of favorable large triggers. The only entry I have that fits any rules at all is a pullback to the area inside of the triggers. This is the only one that fits even a little bit the high probability trend trade. So what I have to do is I have to say to myself, I don't want to just jump in. I don't have any place to hide a stop behind. I don't have my rules met. Where's your termination condition, Rakesh? We talked about this in December as well. Your large chart defines areas. How is a blue fib a termination condition? If all the triggers are above it, is it likely to stop the market if the market pulls back to it? Rakesh, so this is a very simple misunderstanding of termination conditions. Thank you for saying this. Let's go back. And I'm going to do this real quick. We're going to turn this into a pretty cool lesson. Thank you for that, because now I know exactly where the challenge is. I am going to take everything off of my charts, everything except the triggers. And I want you to see something, Rakesh. And this is for everybody too, because this is a good lesson. Let me close that out. All right. If the market is moving up, Large chart, Rakesh. If the market is moving up and there is a blue or a red line above it, make it crimson, I'll make it solid. If the market is moving up and there is a red line above it, that area is resistance. If price reaches that red line on the large chart, this is a termination condition 100%. If the market is moving down, whoops, anything below the market, any lines below, any fibs below the market should be blue. And then that is Fibonacci support. If the market doesn't reach it, it's not a termination. If the market reaches Fibonacci support and the trigger lines remain above, there's your termination conditions on the large chart. Does that make sense? This is where we have to identify the large chart terminations. All of your termination conditions, the areas on the large chart are going to define if trouble's in your way. Does that make sense? Awesome, Erla. Thank you for that. Large chart defines the areas that are problematic. Large chart is where we define termination conditions. Let's make sure that we're good on this one first before we move on to entries. Let me take a picture. So this will be a good one for your spreadsheet. Large chart defines termination conditions if price reaches the area and the triggers remain above support or below resistance, you've reached a termination condition. Not a clear path. Rule 2 not met. All right, Rakesh, this is your lesson. I need you to give me a Y or an N and let me know if you're good. This is your most basic rule for termination conditions. Guys, I embrace every misunderstanding because every misunderstanding is an opportunity to learn. But if you go Mike silence on me after you tell me you're confused, well, then I'll just abandon the lesson. And if you're like, oh shit, everyone knows I don't know this, change your name in the room. Large chart defines termination conditions. Large chart defines the areas that are problematic. Large chart defines where bad things can happen. Everybody's good, right? Rakesh, do you see what happened here? The market pulled right back to the triggers. The market's pulling right back to the areas inside of the triggers. So while the large chart is going to define, let me put my template back on there just so it's a complete picture. While the large chart is going to define the areas that may be problematic. And you know what? Does anyone else need this lesson? I'll continue it. Okay, thank you. I just want to make sure. Problems are defined on the large chart. Guys, areas define problems on the large chart. We're going to use the areas on a small chart for entry. So while lines on the large chart let me know, hey, it sucks to trade into this with the triggers below it, on the small chart, let's find some cool pictures. On the small chart, what I'm going to do is I'm going to use lines, fibs, midbands, yellow 1-to-1s, and I'm going to use them inside of triggers. And when the large chart has not reached a problem, when the most current bar on the large chart hasn't reached the problem spot, I'm going to wait for a reversal bar. And then I have to look for the triggers. And then this is not a termination condition, ladies and gentlemen. As price comes back and hits support, It's not a termination condition because those are on the large chart. This is just a place for the market to bounce. That's all these are. These lines on the small chart represent an area where the market is capable of bouncing, where the most likely spot for continuation is. So lines on the large chart, let's create another picture for you guys. Lines on the large chart will tell me where decisions are potentially made by the people who move the market. These are where I find termination conditions. And then the flip side of that, lines on the small chart will be used for entry. They give the market a place to bounce when they are inside of favorable large triggers. So guys, if you can commit this one little idea to memory, that the large chart defines the areas that are problematic, that the small chart will use areas to define your area of entry, well then you're not going to scare yourself out of a trade, and you're not going to jump in at these trigger lines. You're going to say to yourself, I have to at least have an area inside of trigger lines if I'm going to take this trade. Because when this termination reverses the market, when I have momentum, when it pulls back to support inside of triggers, I want to be in that move. I don't want to be in it up here. I don't want to take that mid band. Guys, these things all come together beautifully. And this is your entry for the highest probability trend trade. And what does that mean? That means that you've got to say to yourself over and over, not mine, not mine. Rules met, pay me. Does that make sense, everybody? I'm telling you, it's just patience. But the problem is that we get nervous, we get anxious, we get this fear of missing out, and we begin to make bad decisions. We say, oh shit, the market's going without me. Look at all that momentum. Dagnabbit, let me jump in. And then we get stopped out and we're upset. And then we jump in again up here. And we get stopped out and we're upset. And we just skip the one that pays us. But guys, these are ugly freaking triggers. And sure enough, that market's going back to the other correction point right now, isn't it? It's a 50-50 trade. The larger below, the smaller above. It's not a clear path. Divergence prints on a 50-50 trade. That can create problems. And that all goes back to the KISS plan, being able to know exactly what it takes to get you into the market so you don't get suckered into these entries that don't give you a statistical advantage. Does that make sense, everybody? I get very passionate about this because a lot of people tell me that I'm wrong, and they like to tell me that, man, that's not rules met, that's not where entries happen, and it's typically a result of just a basic misunderstanding. So always ask me questions, always post in the rooms, let me know what your chart read is. And guys, we'll work together to fix it. I will bring class to a screeching halt to make sure that you're comfortable, to make sure that you're good. So Luciano, I don't see any fibs at all on there. And I apologize if that seemed a little passionate, guys. I didn't mean to. Luciano, I'm going to say you're having challenges because you don't have any fibs anywhere. How many days back are you on your charts? Let's do this first. Let's go to data series. How many days back are you? I mean, I don't see any fibs, and that's a red flag for me. Are you with me, Luciano? Sorry, I know it's been a minute. Oh, I have to scroll down so I can read it. So you're 10 days back, and you reloaded historical data. Luciano, you may want to build a fresh chart. Try this just for grins. Let's see what happens. Go new chart, select your S&P. I know you know how to do this. Let's not put a template in it yet. So click OK, and it's going to bring up one of those bad boys. You do that for me real quick? And then after you do that, right click, and then let's install the template just for grins and put in that 13.2. And you may need to reset your database. If this doesn't work and bring you up where you need to be, then you may need to go through. I did a complete rebuild yesterday. I got rid of every workspace, every chart template. I rebuilt all my database. I got rid of every ounce of tick data that I have. And I reinstalled NinjaTrader just to make sure that I was 100% solid. So it repaired anything that may have been messed up in it. And the whole process took me like 15 minutes. Mine's loading slow because I've got 4 workspaces open. I'm running 2 live videos and a chat room. And the S&P tends to load a little slow for me anyway. So guys, Rakesh did all of you the biggest favor in the world. He posted his misunderstanding in the room, and it turned into a lesson to create clarity. And this is what I encourage you guys to do all the time, because we're all going to misunderstand things, right? It's like when your wife texts you something, you're like, what the hell did she mean about that? Well, it might have been a misunderstanding, and that misunderstanding can get clarity. Um, you just have to listen. So did that help, Luciano? If it didn't, and guys, remember, I'm the worst tech guy ever. I always have been. But if for some reason that didn't help, man, I would go through this process. Okay, cool. And then, of course, if the easy stuff doesn't work, then go through Jason. Let Jason knock it out for you, because what I fix in 3 days, he fixes in 3 minutes. He's pretty amazing. All right, guys, I'm going to take that break I promised to take 30 minutes ago. And I will always skip a break for a lesson. I always will. So I'm going to take just a minute. I got to refill my water. When I come back, we are going to start looking at charts and talking about reads, guys. Go stretch your legs. I'll be back in a minute. It is. Why? All right, y'all, let's get going. I'm just going to say for the record, if any of you have a problem with sugar and gluten like I do, gluten-free Oreos are freaking amazing. I would highly recommend them. All right, let's start clicking on some charts, guys. See if we can't learn some lessons. And then, Rob, let's start with yours because I think that I told you that we would go over it. Why are there one-to-ones at 50.35 here but not here? Because the one-to-ones are created from the swings on the large chart. So it's the measurements on the large chart that create these one-to-ones and give me that idea of where the market may stop. Since this is a smaller time frame, you can see that there's a lot more swings within it, and it'll create different one-to-ones. Guys, it's the same reason why your small triggers get through the area a little bit, but they don't even come close here. It's a different time frame. And again, if the market moves really slow, you'll see this phenomenon where maybe it takes an hour for a bar to form, but there's so many fluctuations inside of it that your timestamps go crazy over here. And it's just a different time frame kind of thing. So divergences as well. You may see a divergence. Why did you see different pullbacks? You didn't. Let me go up to it. I'll open your picture back up. You didn't. You just decided that the pullback should be on the exact same timestamp. So what happens, Rob? Let me open this up. Whoa, where'd it go? Oh, no. Hold on one second, guys. I got to do a little Discord reboot real quick because it's not letting me open your pictures again. Hold on just 1 second. Sorry. Here I come. Here I come. Screen 3, go live. You guys hear me okay? No worries? I know, so I'm going to open up your picture real quick and I'll show you what I mean, Rob. Maybe a little visual will help. Sometimes I know exactly what you guys are talking about, but I don't articulate it well. That's why I draw so much on paper. That's why I do this. So what you're looking at, Rob, I want you to see a couple different things. And I think this will help you a little bit. So there is your bar, right? And it says like right around 702. Are you good with that? That's what you're looking for over here, right? I want you to see where price finally matched. That was about 20 minutes later, give or take, 25 minutes later. And the pullback started all the way over here. So if I put a box on this one bar, it's all of these bars here. So while you see the timestamps moving, this one box, this took almost 30 minutes to make that bar. So your timestamps are going to look weird, right? But go back on the chart. What was this, S&P or crude oil? Crude oil this morning? So let's try this. So I'm going to go back real quick. And that was this one right here. So I'm going to circle it here with those wonky timestamps. And I'm going to see if I can find it on my smaller, faster chart. Check it out, Rob. Lines up perfect, doesn't it? That's the time discrepancy between how long it takes this one bar to form and how long it takes these 30 bars to form. And that's a great example of why timestamps are great, but actually circling the tail lets you line it up accurately. Does that make sense? Pretty cool, right? Oh. It's just because they're different time frames. Man, I've seen large charts take an hour to form a bar before. Um, like, let's circle this one just for grins. Look at all of that in that one bar. And that was from 1036 to just about 1050. So the timestamps look weird over here, 1027 to 1053. It's because it took so stinking long to form that one bar. Hope that helps. It's a good question, though. They won't always line up, like timestamp wise, but at least it gets me in the same ballpark if I can see the timestamps. But if you guys are circling, then I don't even worry about the timestamps. Good question. I like questions like that. And then Miss Debbie came in and she said, hey, Mark, check it out. When I have odds favorable momentum and everything says down, I'm going to take an entry and I'm going to take it down to support. And Debbie, you are absolutely crushing it lately. Absolutely crushing it. And this is one of those looks, guys, where you have to remember how easy it feels. You have to remember how effortless it felt. Because that's the one that you want to repeat. That's the one that you want to do all day, every day. I love it. You were trying to follow momentum, Rob? So why couldn't you follow momentum? Because when this bar formed, there wasn't any on the large chart. It wasn't odds favorable, right? So this pullback isn't a high probability trend trade. This pullback is your first shot off of a termination condition. This wasn't a high probability trend trade either because your large triggers were lagging way back down here. You really didn't get a high probability trend trade scenario, Rob. What you got was a shot at the long from the termination that gave me those super fast small triggers. And notice that it's a pullback to them, and it's a pullback to the large in the area right inside. Well, then that was your trade. I'm not sure what else you would have been looking for. You had it right here to get up to 28 where you cleared everything. This one goes directly into an area. Up here you clear the area and it makes a pretty easy trade. And then Debbie, it does feel good when you let it all work the way it's supposed to work. Let's see who this is real quick. A lot of scrolling. Erla, awesome. So we had the pivot stop out, but the triggers got through a little bit. Odds favorable, odds favorable. And then Erla, can I give you just a little help on the momentum trade? Yeah, it helps a lot. It really does when you take a second. And Erla, you have really embraced the idea of momentum. You have really embraced this trade where both charts show it, and you're doing a great job with it. One of the things that is really helpful is if you let the small triggers get below the problem area on your small chart, and then the market almost always seems to snap back and push down. So your exit right here is actually your best entry. Does that make sense? Letting the market break through and pull back to it, that little hiccup right there is like the best of the best look. So if you do get in here, and I'm not saying don't, you still have to have a stop that gives you a little bit of breathing room there. And it becomes even easier when you let price clear it here. You could, Rob, if you wanted to, if that's your plan. Let's see who's next. All right, getting there, getting there, getting there. All right, Rakesh, let's see what you did. All right, Rakesh, odds favorable momentum, clear path. The only challenge, my friend, is trades come from areas inside of favorable large triggers, which means that 3075 is probably a little bit better, but your stop is in the right place. You have the absolutely right thought process. The large chart's good. Rakesh, this is the one. Take a picture of it. That's your trade. And then here, you have a 50-50. And you don't wait for the pullback. You jump into the very top of the move, and it's pulling back on you. Do you see the difference in your entries? And I don't know if you're still in here. I hope you are. Oh, well, shit, Rakesh. Show me the after picture. From the ES at 10 a.m. Right into high impact news. Right into high impact news. $9.57, Rakesh. Your entry, the rules-based entry, and then you seem to be using a 12-tick stop, which would have kept you safe with all that momentum and a clear path, and produced a winner. So maybe rule number 3, is that your stop? Is that right? 12 ticks, 3 points on the S&P? That's what you're using, right? It looks like it. So the correct entry keeps you in this trade and in a winner, Rakesh. Does that make sense? Well, you lost it. And even if you did lose it trading it correctly, it's a trade that loses 20 to 30% of the time. That's where you've got to. So what does that mean? But you lost it. You didn't follow the rules for entry. You got in early. And when you get in early, let me go, hold on. Fear of missing out can cause investors to make riskier choices than they otherwise might. This includes getting in early with a much larger stop than is warranted, which does not guarantee a win, only a bigger loss if it loses. The high probability trend trade is a trade that typically wins 70 to 80% of the time. The only thing that I can see wrong with that trade, the only thing, and it's me absolutely nitpicking, Rakesh, is that you got in about 2 points lower than the area inside of favorable large triggers. That's it. And that 2 points might have been all the difference for you if you're using a 12-tick stop and you're holding it and waiting it for a reversal bar. That's all I'm saying. I know you lost it. I would lose this trade all day long. I love it. It's a beautiful trade. It's a great chart read. You had every advantage. It was outstanding. I would be willing to take that loss. And this one won, right? Then maybe this is your trade, jumping in on a 50-50. That's cool. Enjoy it. Write your rules on the chart. Odds favorable. Both triggers are up. It's about to break resistance. That's a prediction. This is 2 areas that haven't broken yet from a bad bottom. And you're hoping that it continues up, and it did. Awesome. I love it when you guys get lucky. I really do. I get excited for you guys when you just jump into the market and get paid. I don't feel as though it's a recipe for long-term success. So I'm obligated to talk about the rules and the reads, what I see, and then whether or not you choose to accept it is up to you. If you value everything you do on wins and losses rather than advantages, then trading is going to be difficult. It's going to be arduous. Odds favorable, clear path. You jumped in early and got stopped out at the area inside of favorable large triggers, Andy. Early entry, you get, oh no, you would have, right? Still doing rookie mistakes, not setting the ATM, so you got out early. But you jumped in early, didn't you, Andy? That's the only thing I'm saying. Rakesh, you didn't do anything wrong, my friend. You said that is your entry. I believe you. When I told you that your entry was early, you told me that it lost anyway. So I have to assume that this is your plan, that your plan says that when a bad bottom gives you a 50-50, you jump in arbitrarily and hope for the best, and every now and then it works out. What are your rules for entry here? Help me with that, and I can help you. My rules say that I wait for a pullback to support inside of favorable large triggers. That's what my rules say. So at 10.11 on the S&P, my rules say that my entry, per my plan, instead of just jumping in, is to wait for a pullback, and the pullback never happened. So I wouldn't have been in the trade. Or I would have been in the trade down here. But I mean, you jumped in right here. And it worked. That's awesome. Go back and take 50 pictures of it and make sure that it'll win more than it loses. And I love it. I won't knock you on it. I never knock you guys on your trades. But help me understand the logic. Because if all you're doing is deciding the value on whether it wins or loses, how are you going to repeat it? What if lucky trades win? Right? That's what I'm doing here. Odds favorable path, no pullbacks. That's it. That's the exact same look, the exact same read. The only difference is Andy didn't find his rules met entry there. And you did. You're one up on him there. And then Chef, here's the same look. Odds favorable, not a clear path, Chef. Not at all. Smalls and large are below the area. Divergence off of the fib directly into a termination condition. You trade right into it. Another divergence off of the fib directly into a termination condition. You trade into it. It has been about 3 months since you traded because you travel for work. However, you made some money today based on what you thought worked. Need to get back to following the rules like before. Felt good to make money. Feels even better when the rules are met. Amen. Amen, Chef. Man, the momentum is outstanding here. And guys, let's embrace it. Rakesh, your momentum was outstanding. Chef, your momentum is outstanding. Chef, you traded into so many termination conditions hoping that it breaks. And man, this is one of those things you got to respect those fibs. If you're going to get in here, get paid, re-enter, get paid, re-enter, like quick on the draw. But with all the triggers way the hell down here from a bad bottom, I don't expect these areas to break. The fact that they did is more of an anomaly, is more than an anomaly than it is a recipe for success, in my opinion, based on the chart read of a clear path. I hope that makes sense. Ron says when a termination gives him divergence, he'll take a shot the other way. And Ron, guys, this fights momentum. It fights a clear path. But this is Ron recognizing a pattern at a termination condition. He says there's no way in hell I'm taking this short, but I'll go ahead and take the long because I know it's probably going to run it over anyway because of the patterns. Ron, such a great trade. This is financial suicide for new users. And then Haji, bad top, Odds favorable. Where did you enter? Hold on. 934. So you entered at the area inside of triggers. Two divergences didn't scare you with the clear path. You hold your stop beautifully, still at areas inside of triggers, and it worked. Haji, if we backtrack without any emotion in it, if we backtrack with no emotion in it, one divergence doesn't kill a high probability trend trade. Two divergences doesn't necessarily kill a high probability trend trade. Your stop was behind the reversal bar, behind the trouble, and man, you just let that small chart dance happen and your large chart never even blinked. And yeah, that's possible, Chef. Right next to news. It was trading right into that high probability, so there was a big emotional charge happening there. And the cool thing is, Haji, is even if you took the exit with the second higher divergence, it gave you another perfect reversal bar to capitalize anyway. You just kind of foregone that. So I like it, man. It's solid. It's a solid trade because the large chart says that it's a solid trade. That's the part I want you to get out of it. Is the large chart says giddy up to the downside, good luck stopping me, and you had to sit through a little nonsense from the small crowd. I think it's an outstanding trade. And you didn't get in at the low split triggers. You got in at the high split triggers. And then Jen, weak triggers at a fib, perfect termination, odds favorable, outstanding pullback right to the small, and you get out at trouble. Absolutely beautiful, Jen. Termination, there's the roll, and then there's that pullback to the small triggers on the large chart, which happens to be the large triggers in support on the small chart. Easy money up to the trouble. Great, great, great. Nice job. Guys, I don't care how you enter the market. Let me be very clear about this. I don't care what your rules are as long as they're your rules. It doesn't matter to me if it fits with what I trade because they're not my rules. But here's what I want from you guys. If you're going to take a trade, I want you to be able to do the same thing 100 times. I want you to be able to take the exact same entry so that you can go back and you can say to yourself, here is... Hold on. Here is odds favorable momentum, a clear path, and a pullback to the area inside of favorable large triggers, and that was a great trade. And here is odds favorable momentum and a clear path, and a pullback to support inside of favorable large triggers, and that was a great trade. And here is odds favorable, clear path, pullback to resistance, great trade. And here is the same picture. What are the chances? Here is odds favorable, clear path, pullback. Guys, the whole idea is a statistical advantage. The whole idea is that you can do the same thing over and over. That you can trade a pattern that has a statistical advantage. And Jen, I think you getting paid at trouble is wonderful. I think it's outstanding that you said these yellow 1-to-1s with divergence is the perfect reason to get out of a market. I don't have to hope. And there was news too. There was news right then, which creates problems. And it could have just as easily spiked down. So guys, great. But remember, I don't judge you on your plans. Your plans are your plans. I'll help you develop them. I'll tell you what I see. But your plan, if you can't go back and find the same look and have the same result that wins more often than it doesn't, then your plan has some challenges. Because it's got to. That's okay, Jen. Unruly 50-50 trade coming from a strong bottom. Sorry, cropped it out. Odds favorable, yes. Entered at the fib inside of favorable large triggers. Amen. Divergence printed. Rules say exit trade. Stayed in because you believed in the momentum from both charts. I'm okay with that. Managed quick first profit. Second to the fib. Trailed your stop below the mid band to let price bounce. I don't have any problems with that one at all. Muser. Odds favorable, 50-50. strong bottom. You're trading from the fib, not into the fib. Quick profits because you know it's not high probability, and your chart never blinked. Absolutely outstanding, Muser. This is how plans are made, right? Writing everything that you see, writing why you did it. And then this one got you, didn't it? 50-50 from a bad top, divergence prints. Should have exited, at least tightened up, but you got lucky on sim the last time, so you taught yourself it's okay. You taught yourself it's okay to break your rules. Split triggers, and man, it looks like it went right from the area inside of the triggers up top, Muser. Split triggers, I want you to call Haji and you guys talk about split triggers and divergences. 2 divergences on a 50-50. Man, Muser, you got enamored with your luck and it took you out of the game. So maybe getting lucky isn't always the best. Everything clears. The momentum is outstanding. All right, Rakesh, I want you to see this one because this is a beautiful example of what you're trying to do. It really is. The I love 50-50 trades. This isn't even a 50-50. This is momentum, right? So when you are hoping areas break, guys, you can anticipate the breakout with odds favorable momentum on both charts. And then there's that look again, Erla. Let price and triggers break it and buy that little snapback, and that momentum goes. So Rakesh, as you look for these jump-in entries, a couple really simple ideas. Let it break and then pull back, even if it's a short little snapback. Because if he jumped in up here, he probably gets stopped out. But because he waited for the pullback and he trades from the areas, it makes it a much easier trade. And I'm telling you, guys, this is an awesome plan. It's a beautiful trade. It's just a momentum trade. It takes advantage and it's trading the breakout of this area that has all the potential in the world to break because of this momentum. Rock solid, Muser. I'll tell you, not really. It's more of a momentum trade. It is 50-50 on your clear path. You're absolutely right there. And you know what? I guess it is. You're in at the highest point. So this is one of those times where a momentum trade looks exactly like a trend trade. But you never got a reversal bar. So we omitted the whole sequence for the high probability trend trade entry. That was hard to say. Does that make sense? Since you never waited for the reversal bar, you never created a window of opportunity, but you didn't need the reversal bar because you had all that momentum and that's your spot and plow and you killed it. Bad top, odds favorable, too many areas to trade. This one's problematic. I agree. Big split triggers. This one, on the other hand, Jen, no divergence, pullback right to all of those areas that have been broken. Tons of momentum. And you just had to be a little patient and wait for the second correction point. So maybe an opportunity after there wasn't so much of an opportunity. And then Zorro, odds favorable, 50-50. And you get in on the snapback, and it goes up with those split triggers. It gives you a little bit of grief, but you stay in. And then you come down and right off the one-to-ones and you take your exit. Not your usual, Zorro. You usually insist on a little more of a clear path, I think. With the trigger split, I think it's just, this was a tough little grind down. And was that gold? Are you guys trading gold here? Yeah. Gold's weird, man. I keep watching gold and I keep refusing to trade it because it overruns areas so much. Weak triggers, not a termination. Not a termination. Just a reversal in the market with a loss of momentum. Odds favorable. Clear path, no divergence, perfect entry, easy money. Nice job, Joel. And then Zorro again, same trade. The trade's so nice, you post it twice. I love it. All right, we're almost caught up, guys. All right, D-Rock, your positive days are increasing. I love it. Still have to work on the discipline. Usually lose if you get too confident, start trying to be first, or think you know what the market will do. Amen. When you wait for the momentum to be established first on all charts, let your rules guide me. That's when you win more often than not. It sounds to me, D-Rock, like you have created a plan and you've begun to follow the plan. And when you have momentum on every chart, it's freaking hard to lose. I love this trade. I hate this trade in the termination conditions. You don't want to talk about that one, though, do you? What the hell was that, D-Rock? Not momentum. Did you go long or short? You went short? Okay, you went short off the termination. I got you. And then you got to get that pull back to the small triggers. Caught it on the second try. All right, cool. I thought you went long there. I was like, whoa. Man, look at the momentum. And guys, I want you to see this. Erla, Rakesh, you guys that like these momentum style trades. Look how he lets it break and pull back. That's where it's effortless. Erla, Zorro, Jen, who else is taking those trades, man? These are awesome trades. These are great trades. Momentum, momentum, momentum. Guys, when you have momentum on every freaking chart, that's your look. And then Muser, that's your trade just reversed, isn't it? Momentum for the win, ladies and gentlemen. Momentum for the win. I wish I could get that put on coffee cups or something. Momentum for the win. So, we made it through all the pictures. D-Rock, nice trading. Nice trading. Jen, nice trading. Who else? Muser, nice trading. Rakesh, good chart reads. We're going to work on entries a little bit. Some of you, we're going to work on your entries and your patience. Some of you, we're going to make sure that you understand termination conditions. Some of you are just killing it, and I'm going to make you teach the class. But ultimately, guys, you have to know. And let's go to this. My apologies if I seem preachy again. I'm going to say that all the time. Guys, you have to have a foundation. You have to have a basic understanding of what it is to get you into the market. You have to know what your rules are. And not just enough to know what your rules are, guys. You have to know what they look like. You have to know why they're your rules. You need to understand why those rules give you an advantage. You need to understand why those rules are in place. And then once you know that, you watch 3 hours of John's videos. It helps. And Rakesh, man, I love John's videos. It takes me a while to catch up with John's line of thinking. It took me almost a year to really be able to do it well and follow him. But it's a great foundation. And then it's really just repetition. Hey, Paul, have a great afternoon, man. Thanks for being here. I do this thing, Rakesh. Let me share this with you. What's my thing? And I've done this before. And let me show you guys what I came up with. What's my thing? Where is that? I figure out where I saved it. So my things are trying to go the other direction if it's not a good top or bottom. So I created this list. Let me make sure that if I'm going to try and change direction on the market, that I have a no triggers through termination condition. That's one of my things, guys. Hoping to be first. I don't mind admitting it. No worries. One of my things is trading into termination conditions. It has been for 3 years. So I have this literally on my desk. Make sure that I have a clear path. Never fight the triggers. Make sure that I'm on the correct side of things, guys. And I identified my things. And I identified my things. I was able to identify my things by going into my spreadsheet and coming back to my trade journal and seeing the same thing over and over and over again. I encourage you guys to do that. What are your things, right? Haji's things were split triggers for a while. And I think that he's really kind of worked his way through that because he identified it. Muser, Split triggers. It can't be a momentum trade, right, Muser? How come? Why can't that be a momentum trade? Well, because you have small triggers inside of the large. That's not momentum. That's a loss of momentum. Oh, sorry, first chart, my bad. It's pretty much, it's a 50-50 trade. But you're not waiting for the reversal bar, Muser, which means you're taking these 50-50 trades as breakout, as momentum trades. And when that momentum fails, do you see how it pulled back just about to support inside of favorable large triggers? You jumped in. You probably swore a little bit under your breath and said, man, I hope it doesn't go without me. I'm going to jump in because the path is clear. And it worked. Sound about right? Well, you said that there. Jumped in and wrote it. I don't have any rules for it. The only thing I ask people when they jump in, Muser, is where was your stop? Where did you protect yourself in this trade? Because on the reversal bar on the wrong side of the small triggers, you stayed in the trade. How much were you willing to risk on a jump in? That's the only thing that you have to answer. Is if I jump into the market, where am I going to protect myself, right? So when I jump in the middle of nowhere, you have to have a plan. When you hop in right on the right side of a fib, you can protect behind the fib if you want. And that's the only thing that I need you guys to think about. But it's not a momentum trade. There's no reason to believe the market's going to go beyond the clear path. So essentially what you did here is you said, without 66% of my advantages, I'm going to jump in and hope. And I don't know if that's a fair assessment of where your brain was. But when I go back and I talk about advantages, you gave away, well, shit, hold on. You gave away an entry area and you sacrificed momentum and you were hoping that the market would just go, right? You were hoping, man, I sure hope the market just goes. I hope it doesn't stop. And I don't have any problems with these trades. No, I don't think it's a dumb trade at all. I don't know. Where was your risk? Where did you put your stop? Did you put your stop all the way behind fibs beyond the triggers without momentum and risk $1,000 on the trade? If so, that may have been a little foolhardy. But if you said, you know what, and let me show you, let me do something here. So let's say that you're like, man, I think it's going to go up. The path is clear. I'm digging the look. Life is pretty good. But I'm not just going to jump in. So what I'm going to do is I'm going to let the market try to retrace. And if it fails, I'll get in on the way up, right? And then you give yourself something to put a stop behind. Stop was above the fib. Well, that doesn't make any sense, does it? Because couldn't that have just come back and hit the fib and then gone? Does that make sense? And that's what happens when you jump in, guys, is you just have to pick an arbitrary number. Where am I willing to lose? But one thing that I'm seeing, and that's 3 of them, is that you're getting into trades before the reversal bar prints. Which in a lot of cases, I'm not saying it's yours, is indicative of a fear of missing out. And I may or may not be right on that one. All right, good bottom, odds favorable, clear path, never got a rules met entry, even the reversal would have been problematic. I like it. So, Haji, you said I'm not willing to trade from a mid-band floating in between split triggers. I'm willing to miss this one because my rules weren't met. Am I reading that right? I love it. And that's the thing is once you know, right? Once you know what it takes to get in, you start working on your patience. You start working on your looks. You start working on your repetition, and you say to yourself that this isn't the best of the best look. Here you go, Rakesh. Some days I feel like I'm not heard. No worries. So Rakesh, here is a high probability trend trade checklist. These are the rules for getting in. And here, I'm going to do this. That's really it. It's an area inside of favorable large triggers on the small chart. Waiting for a pullback to an area inside of favorable large triggers on the small chart. Well, what's it look like? Let's go to the instructions. And let's go to entries. So what am I doing? When the large market goes up, I'm looking for areas and I'm looking for fibs. And I'm waiting for the reversal bar. And I'm defining my areas inside of fibs. And I'm getting in at the areas inside of fibs. That is the easiest rules for entry on the small chart for the high probability trend trade. That's a high probability trend trade rules. Is it the only trade? No. Is it the only set of rules? No. Is it the only trade you'll ever take? Probably not. But this is a trade that typically wins 70 to 80% of the time when you take the trade. What does that mean? If it wins typically 70 to 80% of the time, doesn't it make sense that sometimes the rules will be met and a loser will be taken? What blue fib are you talking about, Rakesh? Oh, I see what you're saying. Hold on. Yes. Oh my gosh, I just had a huge aha moment. Are you ready? Did you miss the entire lesson that I gave you after you said, but it touches the blue fib? I mean, I rambled for 20 minutes in your favor, giving the best lesson ever, creating all the lessons in the world to help you understand it. Did you miss all of that? Large chart defines termination conditions, 100%. Large chart defines termination conditions, not your small chart. Large chart, fibs on the large chart, yellow 1-to-1s on the large chart, divergence highs and lows. You're not listening to me though. Rakesh, large chart defines termination conditions. Can you give me a why if that makes sense to you? I'm going to bring it all together. I promise. Thank you, Erla. I need you to let me know that you know that this happens on the large chart. Okay. So if the large chart uses areas to define problems, the small chart uses areas to define entries, Rakesh, and I think this is where the confusion is coming. When the large chart looks like this, whoops. So let's do this real quick. When the large chart looks like this, what direction are you looking to trade, everybody? We're looking to trade up, right? And we're looking to trade with the momentum that's up, and we're looking to trade with the direction that's up. But because you guys are so stinking smart, you're going to wait for a pullback. So Rakesh, we want it to touch. Is this support? Meaning that all of the triggers are above it. We expect support to be a bounce place up. So if I have a blue fib, I want it to touch that blue fib because it gives the market something to bounce off of. But more importantly, I want that blue fib buried inside of triggers because the triggers are where I expect the market to come to. The fibs are where I expect it to bounce. Does that make sense? Man, thank you, thank you, thank you. Guys, I'm telling you, this is how it works. And I get so excited when we have these little breakthrough moments. So here there's problems. Here, that's where your advantage is. I love this. I seriously, I get giddy. I got goosebumps right now. And guys, it's these little things like this that'll completely change your perspective on the market. So Rakesh, let me give you this picture as well. We're going to let the large chart line say don't take any more longs, right? We're going to let the large chart line say don't take any more shorts. But when the large chart looks like this, we're going to let those lines on the small chart define where we're going to enter. And your limit order is going to go just above that blue fib because that's where we expect it to bounce. Man, I really do. I get excited about these things because I remember having the exact same breakthroughs. I remember having the exact same lessons finally click for me. And I was like, oh, thank God. So Rakesh, does that help? So let's go back and find some because I'm like super jazzed right now and excited. When the large chart says up and screaming and everything is good, do you see how it pulls right back? Oh, it was actually this one right here. Do you see how it pulls right back to the blue fib, right back to the yellow 1-to-1s? That's your entry, brother. That's the best of the best. That's the one where once it starts to move in the direction of all that momentum, your risk is virtually nothing. And man, this is the one. Yes, yes, yes. I'm so excited right now. I'm doing the happy dance in my chair. And guys, this is why I love this room. This is why I absolutely love this room. Because I can say the same thing 1,000 times and not everybody's going to get it at the same time. For me, it was termination conditions. For me, for whatever reason, termination conditions were the bane of my existence. And I kept taking that trade into them, and I kept taking that trade into them, and it drained my account. And then one day, I finally had this realization of what I needed to do to stop making that happen. And man, so Rakesh, beautiful. Erla, everything says up with momentum and a clear path. You identified the best, and you got in a little late. And you took it up. Erla, nice job. Great job on the recognition there. Since the small triggers aren't through, you gave it a second to break. Perfect. Same picture. Does that help a little bit with all the momentum? I love that you let the small triggers get above. That's where your advantage comes in if you're going to try it. And then the flip side of this is that you have to know where you're going to manage because if it pulls back, it may pull back all the way to these triggers. So there has to be a management plan in place as well. Awesome. Heck yeah. I'm out of pictures. Yeah, momentum. Momentum is everything. Momentum is what it's all about. Momentum makes dreams come true. That chart has momentum. That chart is losing momentum. That chart has momentum. That chart has the best momentum. And you let the triggers break, and you pull right back to support, and it goes up. All you momentum traders, all you people that don't want to wait for high probability trend trades, you want to catch that momentum, that potential breakout, D-Rock just gave you the perfect look. But let's talk about something. With all that momentum, guys, if this trade fails, there's your area inside of favorable large triggers as well. So Muser, if you get in without a reversal bar on the momentum and it fails, don't you still have a second chance? And the only reason I mention this is because I've got to do one of two things. I've either got to keep my stop all the way down here, maybe add on to it, or I have to say, if it gets below support, I'll take a tiny little loss and I'll look to re-enter on the high probability trend trade. Does that make sense, everybody? So for you guys that are getting in on the breakout, you have to have a management plan. I love the momentum trades. I'm not scared to take momentum trades at all. But I have a very real understanding that almost every failed momentum trade turns into a trend trade. So I have to make choices on my stop. Do I want to lose 3 or 4 ticks and then wait for the next best entry? Or am I willing to keep 5 points on it and maybe just add contracts? And that's where you really have to, that's the next step, right? Finding the entry is the first part. Knowing how to manage it is where you are going to go from $200 days to $2,000 days, is being able to manage your trades. And man, if go look at my brother's trades in Traders Chat and watch how effectively he manages. And it's all a byproduct of the chart read. But the better your read is, the better your conditions are in the large chart, the easier management becomes. Weak triggers at resistance should have told all of you no more trades, right? Should have said absolutely no more long trades. All this momentum with no divergence and a pullback to support, for a lot of you, that's a long trade. 50-50 with divergence said don't take the long. No triggers through said don't take the short. So what are we seeing on the Russell? We're seeing rule number 2, creating consolidation. And we're saying to ourselves, thank you, Fibonacci. I have a clearly defined range that I want to see break out before I look to take advantage of the market. Rule number 2 helps define consolidation. This one had momentum, right? Maybe that's that one that Haji skipped, second lower divergence, it comes down. And look at all the waffling where the things don't line up, where things don't come together, they don't look the best. Divergence on a 50-50 kept you out, but you really wanted to enter. Almost entered, price past midband, then pulled back to it. Rules for the win. Amen, Haji. It doesn't have to be difficult, does it? Haji, you've shown me as many avoided losers as you have shown me winners today. It goes a long way to keep that P&L dry, doesn't it? You should be happy about that. It's amazing. So Jen, when is divergent a problem? Let's go back and review. Let's go back to the rules. So termination conditions may stop the market. They may reverse the market. They may create an untradeable bounce. And we know that the recipe is when price reaches an area and the triggers remain below, you've reached a termination condition. Jen, one of those areas is a magenta divergence high line. So what that means is that when price reached this divergence high line and all your triggers were below, hell yeah, it was problematic. When your smalls got above and the large stayed below, it was a 50-50. And that may have been your entry right there at 35. And then once the small and the large got north of it, it was out of the equation. Does that make sense? The divergence high and low lines are one of the most ignored termination conditions, I think. So much so that I made this one day for one of our clients. And because we're out of pictures, let's talk about it. When the market has a divergence high or low, it's a very specific, exact point in the market that not only could the in control force, buyers at a top, sellers at a low, not go any further in their direction, but they also lost momentum there. And this creates this awesome line in the sand that you guys can see ahead of time. And very often they try to get past it. They're like, man, we got knocked back, but let's go again. And this is why it's in that termination category, because this is very much a spot where, with a lot of regularity, to be honest with you, let's go see if we can find some examples on crude oil. Not a lot of divergences today. When they reach it, price trades above, back below, no more short trades. And I think I just killed my charts. Yep. By trying to click and drag too quick. So absolutely, termination condition, very problematic. And you just have a 50-50 with tons of momentum and no divergence and a pullback to support, and maybe you could have capitalized a little bit on it. Great stuff. Great stuff. Guys, we're getting close to the tail end here. See if I have any wisdom. What is that? No, that's not it. I was looking for I had something that talked about, guys, the things that you have to know before you enter the market, or really before you even sit down. There it is. And I like to share this every now and then. I think this is pretty important. You have to know what your rules for entry are. And if you are trading without understanding your rules, which, and let me go ahead and say this too, because everybody's learning, you don't have to know them like the back of your hand. Practice them, try them, take what you think are rules, right? And then drop it in the room and let's talk about it. But the most important thing is that you tell me what you see. This is why I did what I did. This is what the large chart said, and this is why I entered. Why did you enter where you entered, right? Well, I jumped in because I was afraid it was going without me. I jumped in because it hit a trigger. I got into the market because it was an area inside of favorable large triggers. Let me know what your thinking is, and then if your thinking needs a little adjustment, I can do that. But you have to know that before you get into the market. You need to know what it takes. And guys, one of the easiest ways to do that is to have a checklist. To have it written out in front of you. This is what I have to see to get into the market, and you can begin to learn to police yourself. And then once you find entries, you have to know what your rules are to exit. You have to know what it's going to take to get you out. You have to know what conditions are going to change the advantages and take them away from you. And that's very dependent on the type of trade you're taking. So the management for a high probability trend trade will be different than the management for a medium probability trade. And the management there is going to be different than the management for a momentum trade or maybe for a high volume area trade. So understanding not only what's getting you into the trade, understanding what it's going to take to get you out, and then knowing what your daily goal is so that when you hit it, you stop, you don't give it back, and knowing what your stop loss is and the same thing. And then if it's not clearly drawn out, you're prone to let adrenaline and fear and all that stuff take over. So Muser, when I say wait for confirmation, if you're a two-chart trader, if you are a two-chart trader, and let's say just hypothetically, you've got a 50-50 and divergence prints, and you say to yourself, I want a little confirmation, right? I don't want to just jump in arbitrarily at a mid-band because I know that it's not perfect. Oh, Jen, have a great afternoon, or a great evening, I suppose, there. We'll see you tomorrow. Thanks. Confirmation might be a reversal bar in the direction of your trade, Muser. If you use a range chart, it might be a market flow signal. But typically, it's that reversal bar that says, hey, you know what? You're anticipating maybe this area to hold or this area to hold. Let's let the market give an indication from the area that we anticipate to hold. A reversal bar is typically what we're looking for. A reversal bar won't guarantee a win. It won't guarantee that you won't lose. It will at least give you established risk, right? So if you're like, man, it's either going to be here or here, I'm not sure, let me wait for the reversal bar, and then you enter, the cool thing is well, now your stop's defined. So you get to get into that market with your stop already defined, with it already moving in the direction of your trade. Does that make sense? Hopefully that's helpful. Awesome. Odds favorable, 50-50, bad bottom, pulled back further than the large triggers, entered after it passed the mid bands, and you jumped right back in directly into resistance. All right. And maybe letting it turn the other way is your confirmation. That's what Andy did. Andy said, well, shit, 50-50 with a divergence. I don't know if it's going to stop at the mid-band or the one-to-ones or here or whatever. Let the market get headed the other way above the large triggers, small triggers roll, and I'll try and capture a little bit when it changes. So it's an unorthodox way to take a trade. But it worked out, and Andy put himself on the right side of everything. Ron, have a good one. See you tomorrow. Go grab you a chili dog. And guys, I'm telling you right now, It doesn't matter to me how you enter trades. It doesn't matter to me how you manage trades. I just want you to be able to do it consistently. And if you can't explain to me, and this is one of the biggest things, um, somebody sent me their trading plan once and they said, Mark, this is what I'm working with. I think it was, I hope you don't mind me calling it out. I think it was D-Rock. He said, Mark, these are my rules. And guys, I'm going to tell you with absolutely no hesitation that I could have taken his plan and traded it that day because it was clear. And it was it wasn't long, it wasn't drawn out, it didn't have any assumptions in it. It was clear. And I was like, man, this lets me know exactly what I need to trade exactly like D-Rock trades. And it wasn't so that I could become the D-Rock trader. It was so that when D-Rock posts in the room, I can hold him accountable for what he told me his rules were. And props to you, D-Rock. You're doing a great job, and the evolution has been outstanding. And I'm a big fan of that, guys. I'm a big fan of just let it be concrete in the beginning. Let it be high probability in the beginning. Let it be focused on advantages in the beginning. For whatever reason, traders believe that they should be millionaires in the first month, and I don't know why that is. Nobody ever got their first job out of college and said, you know what? I'm going to make $1 million this year because that's what the CEO makes. And I know that I'm out in my first year here, but that's what I'm going to make, right? If you think like that, guess what? You're a 20-year-old because that's what they think. Pains in the ass. So have a plan. Let it be clear. Let it be concise. Let it be easy to follow. And you should be able to teach it. You should be able to teach your plan. So ask yourself, if Mark and I were in a one-on-one session right now, could I teach him my plan? Could I show him 20 pictures of my plan rules being met? Could I describe in pictures the conditions that are requirements for me to enter? And guys, if the answer is no, let me help you with it, right? If the answer is no, if you can't say, you know what, Mark, my plan relies on momentum, here's 10 pictures of what it looks like when I have it. And Mark, my plan requires a clear path. Here's 10 pictures of what it looks like when that rule is met. And here's 10 pictures of what it looks like when my entry is true. And here's it all put together. Here's exactly what it looks like when my plan comes to fruition. And this is what I need to be held accountable for. And this is repeatable. And this happens every day. This happens in all markets. And the problem is, and let me show you what I believe the problem is with the average trader, because I'm rambling now. And there's a couple different things. The average trader says, these are green, I'm going to go long at this fib, and loses. And then they say, well, this is a termination condition, I'm going to go long, and they lose. And they say, well, this is a blue fib, I'm going to go long, and they lose. And what happens is they're so hell-bent on being the first person in the market that when everything is easy and effortless, they miss the trade. And this is one of the biggest problems that happens, guys, is we're so, like, when the market's right here, they're like, I can't wait to go long. I hope I get to go long. I so want to go long. I'm getting closer to being able to go long. When do I get to go long? Oh, there's my long trade right at the fib. Son of a gun, I got run over. Has anyone other than me done that? Has anyone other than me said, you know what? I'm going to marry this trade. I'm going to make this trade my favorite thing in the world. And I am going to, hell or high water, I'm going to go short when it hits Fibonacci resistance. I'm going to go short when it hits Fibonacci resistance. And when you look back on your trades, you're like, oh, shit. It sure was easy going this direction. Why was I so intent on going the other directions? And this is just one of those things, guys, that if you don't do it 100 times, you don't really believe that it's true, right? You still believe in your heart that you can trade in determination conditions and win. You're still convinced that you don't need momentum, and you're still convinced that great entries don't create manageable trades. So you've got to go through that process of building a little bit of faith, a little bit of trust in the simple. And then the more advanced stuff will come. It really will. Guys, there was a time when I couldn't find a high probability trend trade. There was a time when I couldn't identify a termination condition. There was definitely a time when I felt the market moved so fast that I couldn't get my entries on time. No matter what market I'm trading, D-Rock, no matter what I'm trading, my goal is 250 a contract every day. That's it. And the second I hit it, I shut down. And do you know why? Because I believe that when I take the right trades, 250 a contract is an effortless goal. I think that it takes the stress of feeling like I have to make thousands of dollars every day out of the equation. I feel like it gives me the patience to wait for the absolute best of the best because I know that I don't have to have 10 trades to be successful. I know that I can take a trade that fits my rules and manage out of it, and I have the chart reading ability to manage it and get in on the next one. Guys, this was my picture from 7:13 a.m. when my goals were met. I won't even go back to the market. I'm going to go look for a tee time. I'm going to go try and swing golf clubs. I'm going to do anything other than give the money back because my goal is met. That's the hardest thing to do. Has anyone ever been up $1,000 and ended the day down 500? Other than me? Has anyone ever made $3,000 in 5 days to get your account funded, and then the first day you had the account, blow it out in one day because you didn't respect your stop loss? I've done it. All right, one more. Has anybody ever been qualified in one of those prop firm accounts, and all they had to do for 3 days is take one trade on a micro each day, then shut it down, and they would have had a funded account, but decided to blow it out anyway? Yeah, me too, Liziano. Do you know why? Because you've got to harness your emotions. And if you're not having a good emotion day, guys, you got to go away. And Rob, it's normal. You made 800. Why not walk away? That's the hardest thing you guys are going to do is walk away on a winning day. Or stop trading on a losing day instead of compounding the damage. And that's just part of the psychology, guys. That's more on the psychology of trading rather than the rules of trading. And your emotions get controlled by the news, Rakesh. So Rakesh, you probably had a lot of experience before you came to Nexgen, I'm assuming, because people that trade news typically had some time in the market before they get to us. And this is one of the coolest things is news has absolutely no bearing on my trading other than I don't want to trade into it. And you trade options successfully. Awesome. And money management, yeah. It's just different. It's one of those things, right? It's like you've got this girlfriend and she likes to be kissed this certain way. And then you guys break up and you get a new girlfriend and you can't kiss her the same way, right? Your options kissing isn't the same as your futures kissing. D-Rock, I am willing to lose $350 a contract. I'm willing to go down $700 on the day. It rarely happens. But it gives me room for my percentages because anything that wins 70 to 80% of the time is going to lose 20 to 30. And I give myself enough wiggle room to take 2 rules met losers in a row. If I take 2 rules broken losers in a row, I stand up and I walk away from my computer. And I say, you know what? That's not how I need to be trading. Have you guys seen this one? D-Rock, you may dig this. This was created by a guy that is a very successful trader. Been with Nexgen like 17 years. And he knows what the problems are. He knew what his things were, right? We talk about having our things. And if he misses a good entry, he walks away for a minute. And if he enters late, it's 2 minutes. And exiting for no reason is 3 minutes. And he's holding himself accountable through a penalty box. And I think this is brilliant. You may create your own set of rules. You don't have to use these rules. But what it does is it reminds you, man, breaking my rules isn't the path to success. And one of the hardest things, and guys, I've done this, and maybe, I'm going to show you a picture. I love this picture. My brother's going to kill me. I think it's going to go I lost. I hope it goes I lost. I want it to go I lost. Was it going to go? I lost. I think it's going to go I lost. Guys, you can blow out an account in 2 to 3 minutes. When you are so convinced you're brilliant and you can do no wrong, you can blow out an account in 2 to 3 minutes easily. And most accounts, guys, don't get blown out if you respect your stop loss. Most accounts don't get blown out because of 4 or 5 days of bad trading. Most accounts are lost from a 30-minute emotional window, which is why you have to be all so in tune with your rules, and why I push rules so much, and why I talk about advantages so much. So um, yeah, it's true for everybody. Not everybody will admit it. Um, it's happened to me. It's happened to me more than I'd